Hello and a very warm welcome at the first edition of Invest Austria. I'm Nina Wöss. I'm the chairwoman of the Austrian Private Equity and Venture Capital Organization, in short AVCO. And our mission is to promote a better understanding of venture capital and private equity, because we think this is something that is deeply needed, not for the audience in the room probably, but for many other people out there who really want to make a change. Niki.
Good morning. My name is Niki Futter and I'm the president of the Austrian Angel Investors Association. The aaia is, with around 200 members, the largest Austrian network of private investors. Almost last 10 years, we have been working to develop the ecosystem in Austria and to improve the conditions for private investments. And I'm very honored today to welcome our Federal Minister of Finance, Mr. Gernot Blümel, who joined us this morning. My special thanks goes to our main sponsor, Erste Group, represented today by Mr. Ingo Bleier, Chief Corporate and Market Officer at Erste Group. Thank you very much for your support. I will now pass on to Laura Eck, the CEO of the Austrian Angel Investors Association, who will guide you through the day. Laura.
Hi everyone, also from my side. I'm so excited to be here with all of you and to combine forces for the private capital markets in Austria. So why Invest Austria and why are we all here today? Investments in innovation are essential if we want to create the leading companies of tomorrow. But at the moment, we don't have enough funding for these innovative companies. So change must happen rather now if we want to stay relevant as a business location long term. To sum up, we won't be a top player anymore if we won't start investing in innovation on a larger scale now. This is exactly why we're here today and why we're hosting Invest Austria. This topic is so important that only collaboration can make a change. That's also why we have partnered up with AVCO and are hosting this event together today. And it's not just us in this room. Basically, it's possible to join from anywhere in the world and join us via the live stream here. And it's the first edition of Invest Austria. And we are looking forward to many future ones.
Yes, and I can only highlight that collaboration, not only between the two organizations that are present on stage right now, but actually for all the stakeholders that are sitting in the room, is going to be key if we really want to make a difference and if we want to put Austria on the map when it comes to technology investments and private equity investments. And this means that today we are on the one hand going to focus on the highlights and on the great success cases that already have been created in the region, and luckily there are quite a lot of them, but we are also going to honestly looking at the things that are not working so well, and let's face it, there's a quite long list of things that we want to tackle and should tackle. And I hope that all of you are going to join the conversation and to find solutions to make a difference, and yeah, let's make sure that Invest Austria is not only a nice branding, but actually a claim that all of us are living. And with this, I want to pass on the torch to Ingo Bleier, Chief Corporate Markets at Erste Bank, and a trusted partner and supporter of our mission and vision. Ingo, the stage is yours.
Thank you. Ladies and gentlemen, welcome on behalf of Erste Group and the conference organizers. If we could turn down the tone a little bit, please, otherwise I hear myself very loudly. That's not so convenient. I'm very proud to be part of this opening, together with our colleagues at Intermarket, which is our factoring subsidiary, and Erste Asset Management. We have been sponsoring the AVCO conference already for a couple of years. And we are now seeing a benefit of this combination with the Austrian Angels Investors Association. And therefore I also would send greetings from Vienna to all the online guests that are dialed in today. If we move to the private equity and venture capital ecosystem in Austria, and if we move to the first slide, please. It's called a keynote, but I only have a short opening address, in fact, to share with you. for a couple of minutes, you will find that we are on the map, but we are pretty small. Now you may say, okay, Austria is a small country, but there are also other smaller countries around that see higher proportions of GDP invested through private equity, through venture capital, through buyout facilities. Now, there's certainly a number of reasons, and I will not go into detail, but overall, I think the takeaway for all of us should be that there is massive improvement potential on the amount of capital that can be invested on the private equity and venture capital front. And conferences like this, and that's why we are sponsoring it, will contribute to mobilizing more capital. But I would not want to be, overly pessimistic now. I call it a potential, because if we move to the next slide, then you see that there's a lot of things that work pretty well. And don't be disappointed if your fund manager is not on the map now. Yeah, we selected a few so that you can see that there's really a lot of initiatives that work, whether it's venture capital, early stage capital with state sponsorings, whether it's corporate direct investments, which you see here on the top right, whether it's bank direct invested capital. There are, friendly competitors of ours that believe private equity should be invested primarily out of the bank balance sheet. There is funds that invest regionally out of Vienna, like the one on the bottom left, but not enough, regrettably. And there's very good, investments with respect to offsprings of university, of scientific research that funds are investing in, like this example here on the right-hand side with EastCube. And then there's revenue-based financing, subordinated capital, that we have also sponsored over the last few years, as some of you will remember who were here at the conference before. Now, what we want to do going forward, we want to mobilize more private capital. This is why I announced today 2 initiatives of Erste Group in this respect. One is a regional fund of fund that will invest into smaller fund managers in Austria, in Central and Eastern Europe, where we understand the local peculiarities very well. And the second one is Erste Business Capital, a fund that we are setting up to be dedicated to the Austrian SME space. And we would like to draw from all the experience of the managers we hired, Ralf Kunzmann, Werner Edlinger, Thomas Bobeck, who will run this fund and will grow, hopefully, the amount of capital that is available for the Austrian SME sector. The amount of capital that will be needed for ESG transition investments, to foster technology, to grow in international markets, also for smaller companies, will be quite substantial. And we see our role here not only in putting an anchor ticket into such funds, but also to mobilize among our private banking clients, among our institutional investors, insurances, pension funds, within this whole ecosystem, a number of investors to dedicate capital to the Austrian SME sector. Now, I've spoken before about the upside. If you compare, if we move to the next slide, please, the number of registered Austrian alternative investment managers, if you compare the number of funds in this country with a country that really wanted to create a marketplace for asset managers, you will see how large this potential is. And out of Vienna in particular, there's a lot of corporate investment going into Central and Eastern Europe, and hence I believe we are really punching below our weight in Austria on the private equity front. There's so much private capital that can be mobilized to be invested here in the country and regionally, and hence I would not see this as a problem, but rather as real room to grow for us. So I really encourage all stakeholders, including all the representatives of the government, for a real Austrian capital markets Standardpolitik. Thank you very much, and I think that's a good intro for you. Thank you, Minister, for coming.
Thanks a lot, Ingo, for basically opening up the stage already for our next keynote. And we are also going to switch to German now. Willkommen, Herr Bundesminister. Danke, dass Sie sich Zeit genommen haben. The stage is yours.
Vielen Dank. Soll ich Deutsch bleiben oder should I switch to English or is it?
Actually, both is fine.
Okay. What do you prefer?
I would actually prefer English for
Okay.
the guests that are already here.
Okay, no problem. Well, thanks a lot for the invitation. It's a pleasure to be here, and I would like to start with a big thanks, which might be surprising, but everybody's talking now about being in a transition period. Being in a transition period in economical means in going towards a sustainable, broad-based economy. And that, of course, means that a lot of money is needed to finance this transition. A lot of people are needed who believe in this transition. And of course, you are some of those people that are making change possible. You are the private investors. And therefore, thanks a lot for making it possible to change and transite our economy and society. That's a big thanks, and that's your applause. I would like to start my short introduction with looking back to the time where we had lots of economical problems during the Corona crisis. And I guess also you had sleepless nights and big challenges ahead of you when you read the first newspaper articles about the pandemic sweeping over the world and coming to Austria and Europe. Because the question arises, of course, what does this do with my investment? What does this do with our businesses? And to be honest, we in the government, we had the same sleepless nights and problems to think about how to deal with it. There are some learnings that we took away from this difficult time. First of all, the pandemic crisis hit the Austrian economy much harder than in other countries. Why was this the case? First of all, the pandemic affected some business models more than other ones. Those business models where you need personal contact are, of course, affected the most by a pandemic. And unfortunately for the situation, those business models are highly important for the Austrian economy. 15% of GDP is derived from tourism industry, for example. 15%. That's huge. There are only 3 or 4 countries in the European Union that have a higher contribution from a tourism sector than Austria. I think even Italy is below us. We are quite equal with Spain, for example, and I think it's just Greece and Portugal that are ahead of us in importance of tourism. And secondly, those companies are the ones with the lowest equity ratios. And this combination, that those companies are mostly affected and have the lowest equity ratio, of course, presented a huge problem for the Austrian economy. We tried to talk to international people. There was no blueprint how to manage a corona pandemic. We talked to experts, we talked to investors what to do. And one of the first proposals was, well, just issue state-guaranteed loans, 100% state-guaranteed loans. And we tried to do it. It wasn't easy because European regulations and so on. But in the end, we did it. But if you have a high debt ratio, it's just not working for you. And that's why Austria took another step, and we increased direct grants in a large volume, much larger than nearly any other country in the world. That cost a lot of money, of course, but I think now after the pandemic, we can see that the businesses are still there, and it contributes vastly to a recovery of the economy. We have a good perspective of growth rates. I think it's nearly 5% this year. It's much above 4% next year. And of course, that's really important for the finance minister. That's important for the jobs, for the companies in Austria, and that's of course important also for the investors. So I think the prospect is quite good, and we can be optimistic. We also looked around Austria and tried to say which new regulations do we need to ensure that private investors can do their business in Austria and how to increase it. And 2 fields of actions were identified. First of all, there is no legal framework to create an Austrian fund according to Austrian law. first point. I think we saw it on the slide that the legal framework is still to be improved, and therefore we tried to create an Austrian legal framework according to the SICAV model from Luxembourg. It's nearly finished, it's still in negotiation, but that will of course ensure that we will have a legal framework in Austria to set up funds. Second, due to European regulations, some private investors, and I'm looking to Erste Bank for example, would have a challenge in continue to do their business if some regulations that are discussed on the European level will be applied. Therefore, we tried to set up a framework that ensures that private investors, for example, some banks, will be able to continue to give money to private companies, will be able to continue to participate in equity of private companies. It's called National Legislative Program. It's kind of a funny word. We call it Wiederaufbau IV, makes it much easier. And also this legal framework is already with the ECB to be approved, and if it's adopted, then I think it's a major step forward to ensure the way of business is financed in Austria. I would like to come to my third part. Everybody's talking about the eco-social tax reform at the moment because we just released it and announced it on Sunday. And I would like to just make a few remarks on what were the goals that we wanted to achieve with this tax reform. We had 4 goals all in all. First of all, for us it's important to leave more money in employees' purses. That was one of the big goals that we wanted to achieve. Second, of course, CO2 emissions will be priced. So it's getting more expensive to emit more CO2. It's not the big surprise, I would say. It's what internationally is discussed on a quite broad scale. And also this is done with a, I would say, modest introduction of a CO2 price and slightly increasing over the next years, transferring to a trade system like Germany has in the year 2026. The fourth goal, the fourth challenge was that we wanted to ensure that despite the fact that we will tax emissions, that companies in Austria will be able to flourish, will be able to grow, and that the Austrian economy will be able to attract more companies. And that was one of the main reasons why we made a step that is highly criticized by many people, that wasn't there for 15 years, and that is not discussed in the rest of Europe. We lowered corporate taxes, or we will lower corporate taxes from a level from 25% to 23%. It sounds like a little step, but if you do some kind of benchmarking, how the discussion is going in other countries in Europe, for example, Germany. If the liberals in Germany have one goal during the negotiations for the coalition, and that is no increase of taxes, then I think you know what it means if we make the step to lower corporate taxes. The liberals, the liberal country of Great Britain, for example, announced to increase corporate taxes, I think up to 25%. We are taking an opposite step. So I think this will attract more companies from all over Europe, and this will make it more profitable and feasible also for investors to try to say, we're going to invest in Austria. And the fourth goal was that we somehow have to cope with high deficit levels of the states. After Corona crisis, we increased our debt to GDP ratio in the last budget proposal for this year, nearly up to 90% of GDP, nearly up. It was 88.6 or something. I think it will be lower, but that was the forecast, at least based on economical surveys. That's too high. It's not a problem at the moment because due to ECB politics and vast money expansion, we really pay little interest for our debts. Just to give you a figure, 10 years ago, we had an annually amount of interest to pay of about 7 billion euros. That's have increased until then, and now we pay 3.6 billion euros per year. And that's of course huge, because having 3.5 billion euros more or less on a structural basis, that makes a difference. And we will try to keep this advantage in interest rates on a long-term basis. The average maturity of the Austrian debt structure is very long, 10 years at an average. And that, of course, ensures us against volatility in interest rates. But that's not the only thing we did. We also will lower the debt to GDP ratio each year until the end of this upcoming financial framework, 2025, down to in the direction of 70%. Won't be 70 exactly, 72, maybe something around this figure. But that means that from a prospect of having nearly 90% debt to GDP ratio, to the end of the financial framework, we will really considerably reduce the debt to GDP ratio, and that of course gives us more credibility as a state towards investors, towards those people who lend us money, so that we can finance important subsidies or try to combat crisis. I think that's important, not only in principle, but also because we know that the next crisis will come sooner or later. Some people are so optimistic that they say, well, we don't need any debt to GDP ratio figures anymore because interest rates are low, growth rates are high, so no problem. But that's a dream. Looking back, the last 10, 15 years, we had 2 global economical crises, and therefore it's our obligation towards the next generation, towards the next difficult times, that we will be in a budgetary situation to help again if it's necessary. With that, I would close my remarks. Thanks a lot and have a good day.
Thank you so much. I think we are especially looking forward to everything related to SICAF that is going to come. Thanks again for taking the time and giving us also insights into the dynamics around the tax reform. I think this was a great way to also start the day. And yeah, we are very much looking forward to be in touch with you and your ministry also in the future.
Thank you.
So, after we got a little overview from the regulatory side, next we will guide you through the different stages of financing of innovative companies. To get a startup from being founded to an IPO, different kind of investors need to work together, and they also need to talk to each other. That's exactly why we have created the panel, The Funding Life Cycle, from public funds to IPOs. So welcome on stage our panel host, Markus, and the panelists, Eva, Henriette, Anthony, Conny, and Laura.
I'm fine with that one. I hand out microphones. All COVID safe. There we go. There's, okay. Perfect. Maybe we can make it a joint effort to come a little bit closer to this side, otherwise Laura will be hidden behind the panel. Yes. Good morning, and welcome also from our side. It's amazing to host the first panel of the day. It seems that I have missed the dress code memo today, but I'm actually proudly destroying startup conference dress codes since 2010. Anyway, I am joined by an amazing panel that pretty much covers all stages, from starting a company to taking it public. So I will not do long introduction because, as part of the briefing, you were asked to come up with the best possible introduction on your own. Maybe one word on myself. I'm Markus. During the day, I'm a partner at Speed Invest. We're a venture capital firm based in Vienna. And during night, I try to support aaia in promoting angel investing in Austria. Let's start right into it. Let's start with the intro. That is the most straightforward question of that panel. So maybe we can do a quick round where I'd ask you to, one, briefly introduce yourself, and two, maybe shed some light on your usual position in that life cycle from pre-seed to post-IPO. Maybe when we start from the left, Laura.
So, hi everyone, my name is Laura. I'm Chief Growth Officer at the company Go Student. For those of us who don't know us, so Go Student is an online teaching platform from Austria. We are also the first unicorn in the edtech sector in Europe. I joined Go Student in 2018 to actually support the two founders, Felix and Gregor, to execute on the idea. So with my experience from Google in sales and marketing, I helped them to bring the first customers in. We grew actually tremendously to now a community of 7,500 tutors who are supporting on a daily basis K-12 students in their daily actually struggle with schools. So we help kids from the age of 6 to 19 years old with their homework and helping them to study for the exams. So when I joined the company, we just had a product. So we had to bring it actually to the market, bring the first customers in. So we grew from having business angel investors and family investors with us until now having tier 1 investors, like today Anthony representing SoftBank, to help us actually in our journey and scale Go Student beyond Austria to the whole world.
Cool. Thanks, Laura. If I'm not mistaken, I happen to know your story a bit as I was on your board for a couple of years. It's fair to say that last year, like 1 year ago, you were roughly 50 people, and now you crossed the mark of 1,000, Felix told me.
Almost there, yes.
Okay, yeah,
so yeah, we are almost about 1,000 employees. So before Corona, actually, we were 50 people. And this is one of the things that I think we are the proudest of is even during a pandemic, how we managed to actually grow a company and keep the culture. Because at Go Student, one of the biggest things is the culture.
Cool, that's probably a second panel. We could probably talk 1 hour about that fact alone. Thanks for the intro, Henriette. That is now, we're moving from startup to corporate world, Vienna Stock Exchange.
Thank you. Okay, Henriette Linninger is my name. I've been working for the Vienna Stock Exchange since quite a long time, so it's more than a decade, and I think I'm the oldest here in the panel. I have two hats on at the exchange. My role is serving the listed companies, attracting new companies, and I'm also responsible for the market data sales. So in regards of this finance cycle, I guess I can say that we are on the very top of the finance cycle. So I'm very happy to be here and hand over.
Thank you. Another strong transition from the very end of the life cycle to the very beginning. Connie.
That's right. Hello, everybody. My name is Connie. I am an entrepreneur for about 20 years or more, I guess. And we are in the fitness and health industry. So we run about 15 companies in Salzburg, which is a group, mostly fitness clubs. And actually, I'm from Munich. And in 2019, I founded the CK Venture Capital together with my sister Katja. And with this vehicle, we invest as business angels in startups with a high focus on impact startups. How do we define impact? We are looking for real game changers, for companies that solve a global or local problems, or how we call it, to make companies that make the world a bit better. And we invest mainly in the pre-seed and seed fund. And we invested already in 11 startups and in 1 VC fund so far.
Thank you, Eva.
Good morning, everyone. So jumping to the Series A stage now. So I am Eva, investor at the 3VC fund. We started investing in 2018. And what excites us are teams that build companies out of the Central Eastern Europe, that build companies out of the German-speaking market, but have global ambitions at the same time. So, and we would normally invest in the phase where companies have the initial proof of market, where they have the initial significant revenues and are ready to invest into growth and, of course, continue investing in the product.
Thanks, Eva. Finishing off with Anthony, let me say that we are I'm happy that each and every one of you joined, but you are probably the one who had the furthest travel. So thanks for making it to Vienna. And I think it's probably fair to say that you are representing the biggest venture capital fund on this planet.
That's probably fair. So thank you, Marcus, and it's great to be here. So Anthony Dowie, partner at SoftBank Vision Fund. We are late-stage growth equity investors. We are involved in a lot of IPOs. We take a lot of our companies public. So for example, Auto One, we IPO'd that on the Frankfurt Stock Exchange earlier this year. We also are going a little bit earlier in our second Vision Fund. So we've done a lot more Series B and Series C in Vision Fund 2 compared to Fund 1. And for us, that's pretty early stage. So thank you.
I've read yesterday, I think, that you've done 150 deals year to date.
That might be a little out of date. I think it's 180 plus.
Yeah. Obviously, because the article is 2 days old, right? So you were able to do a few more deals, and also as we have a significant portion of our audience here from Austria, you have 2 Austrian portfolio companies, right? If I'm not mistaken, one is GoStudent, and the second one is at Verity.
Exactly right.
Cool. So now that we know who does what, I'd like to do a bit of a deep dive on the life cycle, and I thought it makes sense to do this as practically as possible. And as we have a startup with us on stage that went from pre-seed to growth financing, I'd like to start with you, Laura. So maybe you can shed some light on your early days. So from pre-seed to seed, then we take it up with the 2 representatives of early stage investing, and then we continue your story to the present day, and also maybe you can give us a future outlook, and then I'd like to finish off with Anthony and Henriette representing later stage financing options. Stage is yours, Laura.
Thank you. So GoStudent, the company, was officially actually created in 2016, thanks to, first of all, family and the first business angel. So the first money came actually from a circle of trust who brought also the confidence to the founders that the ideas, the vision was worthwhile. We started with that money to build the company, get the first students to actually support them, and build actually the homework chat, which was the first product at that time. It was a WhatsApp chat based on where students could actually write their question from school, and then tutors would support them. With that first product in mind, and that first prototype, the guys also went to more business angels, and then we also went for pre-seed and seed capital. That's why, that's where actually 2 companies, 2 investments from Austria, Pioneers and Speed Invest, joined our journey. They believed in our vision, they believed in our ideas, in the market we wanted to enter, and they support us in building the product and help us to get the first market fit.
And what was tricky back then? I mean, you can very freely share in case we fucked something up back then. But I assume it was trickier to raise a couple of $100K than it was to raise 200 million a couple of months ago.
Definitely. So I think first of all, the age and experience of the founding team was one more challenge. So when you are an serial investors who have already a track record of successful companies, it's always easier actually to get the first investment. But I think they're actually what brought them in getting actually those first investment were their storytelling, their vision, and one of our value at GoStudent, how bold they are and how they were actually showing to investors that it was worth investing in the company.
Cool, thank you. Connie, I think it's fair to say that you're probably the earliest investor, at least on that panel. How did the pre-seed seed ecosystem change over the last couple of years? What is important for you when you're considering to invest into a company? And maybe also what are current challenges of your stage that might not have been there like 3 years ago?
So actually we started 2 years ago, so I'm not so long in the ecosystem to compare the period. But when I think about the challenges in this as a business angel, it's not, the challenge is not to find a startup or to make a good deal. I guess the most challenging period is the period between the seed phase, the seed round, and the Series A round. Why? Most startups tend not to collect enough money in the first rounds. Yeah? And they underestimate the time it needs from the seed round to the Series A. So in the Series A round, you need the venture capital funds, you need the big corporates, and they need time, I guess. So if I think you can tell us more about that. They need time. They analyze sometimes about a year or so before they invest in a startup. And they have got multi-level decision processes. And so in the end, the company, the startup is running out of money because they underestimate the problems they face until they have the first sales. And that's a very difficult and dangerous situation even for the investors, because at this point they have to do sometimes, let's say, bridge financing or to help the startups, and nobody really wants that. And I think that's a problem, and it's a really challenge for the business angels.
Gotcha. And also thanks for this great transition towards Eva.
I think I could speak now for hours based on what you just
said.
Please
don't.
I won't, don't worry. But I think that's why pre-Series A round has almost become like a proper round name that exists, because many companies just have not enough seed capital to get to the Series A stage. But if your question is, so what has changed now in the past years? So today, definitely it's the founders market. So 5-6 years ago, it was founders pitching to investors, and I was back then on the side, pitching to investors, and I thought that's such a cool job. Everybody comes to you and you select the great opportunities. But today it's more about investors trying to get into the best deals. But at the same time, I have to say, I think it's a small fraction of companies and teams that have this privilege to choose maybe even from 10 term sheets. Because they are operating in a huge market, the founders are great storytellers. They manage to create at least a bit of FOMO, and then the valuation is going up and you can raise around pretty quickly. But then still a bigger portion of companies, if there are some question marks around the market, maybe around the team, around the history, around the competition, I think then it's still hard to raise a proper round. So we see a lot of concentration in the market. And what has also happened now in the past 2 years, so we see everything from investors sending a term sheet and saying it would be great to get to know you. So that's as fast as it can go as well. But then of course there are also investors like we that we actually really try to build a relationship and get to know the founders, help them before. But this is possible because we have to do, and we do only 3-4 investments a year, so we're not under pressure to deploy, to do a lot of deals. If we had to do 25 deals these days, I think it would be much more harder to remain loyal to our strategy.
Speaking of raising rounds quickly and deploying a lot of money, I think that was again a perfect transition. What's your biggest takeaway from the market developments over the last 18, 24 months? I feel a lot has changed.
Yeah, I think what's been really exciting here in Europe is we've seen this explosion in companies at a level, at a scale in Europe that we are able to invest in. So in our first vision fund, we did, I think, less than 10 investments out of 90 were in Europe. That's because there just were not the companies at the level of maturity for the stage of investing that we were looking for, just a handful. But in our second vision fund, we've done 40 investments in Europe already, so 4 times as many as the first fund. And there's just been this explosion in the quality of companies coming out of all regions of Europe, Austria included, but actually every country in Europe seems to be producing this phenomenal number of startups at a level where they're really ready to get big, to become massive disruptors and huge companies of the future, and that's why we're very excited.
I think I have to ask you the billion-dollar question that you probably have answered or have been asked multiple times. So there's, on the one hand side, there's people saying that, you know, it's a bubble. There's so much money on the market. Up rounds are raised so quickly that can't be, like, you know, working out for another 5 or 10 years. And then there's others stating that the one thing that just changed is that, like, 1% of money that has been invested on public markets, like 5 or 10 years ago, is now going into private markets, and that's just a ton of money, and that's why we see so much money. Companies are staying private longer, and it's just a natural development. What's your take on that?
Yeah, so we're optimistic on the environment. It's definitely a hotter market than it has been, and we have to be pretty careful about what we invest in. Some things we are passing on valuation at this point in time, but we're finding plenty of opportunities where we do like the risk-return profile. And it's just a phenomenal environment where there's this huge pipeline of opportunities. The great news for us is that Europe is relatively cheaper than other regions. So the US, North America, India is extremely hot market right now. In Europe, we've had relative value. I think that's crept up over the course of this year. And we're seeing more global investors coming to the region, but risk return is still good opportunities here. The other comment generally is that I think valuations are justifiable at this point. And what you have to remember is that valuation is always a function of growth. And because there's more growth around, because there are better companies with bigger opportunities to deploy capital and generate great returns on that capital, the growth delivers the valuation and vice versa. And because of the capital, you're getting more growth. Because of the growth, you can afford those values, and it's a virtuous cycle.
Gotcha. Maybe for you, Laura, to keep in mind when you go out, raise the next round. Europe is cheap, so there might be an opportunity for you. Henriette, how did, like, you know, the whole market environment influence your job, influence Vienna Stock Exchange and public markets in general over the last, like, 2 years?
Yeah. You know, my job is very much influenced by the market conditions, of course, for financing companies. I would say that, especially Vienna Stock Exchange, we could catch up the last 2 years in sense of liquidity. So we have, you know, we're celebrating 250 years this year, so quite boring, but for you younger guys, but. In this celebrating year, we have record-breaking leading index, the points of the leading index. So we have record-breaking liquidity figures, we have record-breaking bond listings. So, and we have a lot of smaller companies stepping on the direct market plus at Vienna Stock Exchange. So what we don't have at the moment so much is bigger companies doing IPOs. And I guess the challenge here is the market environment, if you want to have the interest rates, so they can finance cheaper. That's one reason. The second reason is that Austria does not have that huge pipeline that other countries have in regards of private equity and VC exits. But I'm very much convinced that this will change in the future, so thanks to all of you. Yeah, so I would say the IPO environment is, the IPO windows is wide open, and I guess will still be.
Cool, thank you. I'll ask you a question exactly on that in a minute or two. First, a bit of a public service announcement. We'll do one more round on the panel, and then we'd be happy to take your questions. So I'm fully aware it's still early morning, but I'm also confident that most of you have had plenty of coffee already. So you have now another 5 to 10 minutes to think of your smartest questions that you always wanted to ask to the audience. Before we open up the floor, I'd like to talk a little bit about, like, the the state of the Austrian/European ecosystem in particular. Anthony, you said that the amount of great companies coming from Europe that you've seen is exploding. You seem to double down on the European ecosystem, but there's also things that are not working out that well. As Nina said it during her intro, we'd like to address both parts. So what is great and what are still areas where we need to work on. I think I'd still like to start early. What does it need in Austria to get us to the next level? Because I started my company in 2012. I joined Speed Invest in 2015, and I think over the last 10 years, the Austrian startup ecosystem grew significantly. No doubt about that, right? It's popular in Vienna to always complain, and we rightfully do so. And there's a lot of stuff that needs to happen, but at the same time, also. The ecosystem grew, there's way more early stage capital, there's way more infrastructure, so there are good things. But I'd like to talk a bit more about upcoming challenges. So what do we need to change in order to catch up to startup capitals in Europe?
Yeah, the startup ecosystem is definitely growing, but I think we still need more business angels. More business angels means more money in the pre-seed and seed rounds or phase of the company. You called it, it's a bubble. I call it a secret circle. Once you're in this secret circle of the startup ecosystem, everything is great. You have great networks, you have great events, conferences, everybody helps each other. But from outside, you only know about the startup system over die Höhle der Löwen or 2 Minuten, 2 Millionen. And I talked to so many people who can't imagine that startup investments are a real asset class they can do. There's always they always think, oh, you have to be at least CEO of a big, huge company or better a company group, or you have to have a big or a massive sales or marketing network. Then you can be a business angel, but that's not true. You can step into the ecosystem with smaller amounts of money, but it's a thing of visibility, I guess. Mm-hmm. And the second thing is, it's not only a secret circle, but I would sometimes call it a secret boys club, because there are not enough women in the market. We see it today, as I saw it, or I see it almost in every event or conference, there are only 6 to 8% female business angels. That leads to the fact that there are only 18% female founders, so we know this unconscious bias thing that male investors tend to invest in male founders. I think that's a great problem because there's a lot of female money out there. The females, they have money, they could invest, but they don't trust in themselves, and they don't know that they can do that. And that's, I think, we can make the market more attractive for female business angels, and I think it's a lot of hidden money, mm-hmm. Actually. And the second thing is, I think it's and the second thing is, I think we need a change of the mindset. We are also invested in an American company. It's called C Combinator, and what I see there, maybe it's just this one case, but I realize that in the States, the startups raise much more money in the first rounds, up to 3, 4, or 5 million, only with business angels. They have 15 or 20 or even more business angels. They don't care about the cap table. Yeah? They say the more the better networks, the better contexts, the better ideas, the better support. And we always think small, especially in Austria. We are a small country, and we always think a little bit small. And we always think, well, we don't want to have so many people in the cap table. And I think we could change that definitely to make it wide open.
I could really see that Eva wanted to comment on that. It was very visual. And it was again a great transition because the two questions I wanted to ask you initially were, one, how did your investment strategy change during the pandemic? Because what I've heard a couple of times, and also frankly what we've done at Speed Invest, investment pace increased, but at the same time I also have the feeling that it got even harder for first-time entrepreneurs to raise money because you want to build a relationship with them especially, whereas if somebody has sold 2 companies before, it's way easier to reference them and it's way easier to chip in money basically over a Zoom call. So how did your investment strategy change? And also, do you agree that it needs more money in pre-seed and seed stage? Because usually in Austria we say, like, the early stage ecosystem is very well developed. There's a lot of public support in the beginning. There's a lot of angels. There's a lot of pre-seed and seed investors. But then when we enter your stage around Series A, there's this big gap. So, a long question.
Yeah. I'll start with the second one because I have your comments still in my head. So I think the public grant system that works very, very well for the deep tech companies and so on. And I think that even today there are now more and more also pre-seed funds that are looking more at Austria. So I think the capital actually would be there. I think what you mentioned, the mindset, is something that I wish we will see a change, because often the companies we see here in Austria, they are just not as ambitious as maybe some other companies. They will start in Austria, then they might go to Germany after 2 years, but that's not aggressive, that's not ambitious enough for many investors. And really then thinking big, thinking global, thinking about positioning in a global market, that's what I'm missing quite often. And I think if that changes, there will be also more money and maybe international money being attracted also to the Austrian early stage ecosystem. But of course, I think we can also unlock a lot of capital here locally by incentivizing the investors. So what works well is the public grant system. I think what could work better, and related to what you said, that in the US they would take 20 angels. It's because in the US, if you take 20 angels, you don't need every single signature if you do the next round, right? But here, it is a real pain. You cannot manage 20 business angels, and if some get challenging, and so I wish that we could take the National Venture Capital Association documents more or less and use DocuSign and do deals. That would because some US investors, I think after they invest once here, I'm not sure if they would do it again, because it's really a pain.
That probably would fill another panel. I'd have a few stories to share on that as well. But culture was, sorry, you only answered the second part.
So culture is definitely one thing. And I mean, what has changed in our strategy, to be honest, not a lot. As I mentioned before, we remain loyal to our focus on Series A, but we can do that because we do 3-4 deals a year. And as you said, the big funds that typically did Series A and Series B, yes, they do seed investments now, but they do them into entrepreneurs that they have known, also what you said. So it is more challenging. So you have to build relationship earlier on. You have to help them, because you cannot expect that you will get a seat at the table if you get to know them months before they actually are ready to take money.
Laura, I think that's also a good segue into the question I wanted to ask you, because it's also about culture. It's also about ambition. I think you've launched in 15 countries in parallel lately. So I think global ambition is we can check the box. But you also have a very broad set of investors on your cap table, and the focus of that panel is fundraising and investors, from angels, smaller funds such as us. And also, when it comes to growth funds, very, very different profiles, right? There's investors on the cap table that have been in that industry for like decades, but there's also private equity funds, hedge funds that are moving into growth stage venture increasingly. Can you spot differences between them when it comes to the culture on your board? Do they provide input on different areas? So how does it work?
Yeah, so definitely. And I think investors specialize in a certain stage of a startup for a reason, because they also have different capabilities and competencies on board. So when we think at the beginning, business angels, for example, they are there to be a bit more on the operational side, maybe also to bring confidence, to bring the first network to the company. Then we move to the seed capital, where, for example, that's when Speed Invest actually joined us, where the product was ready, and then they told us, okay, guys, it's good to have a product, looks good, now it's time to make the first euros and bring the first customers in. And that's where they also helped us to understand what are the priorities. Now the priorities are to go into the cold water, start calling customers, start finding our business model. They help us to also hire the first maybe few employees that were really paramount for this execution. Then actually for 2 years, our case was about to build the case for our Series A too, so to prove our business model. And in 2020, so we got DN Capital from London and Left Lane Capital from New York in the board. And they were still also very much on the operational side. So they supported us still with, market strategies for internationalization, understanding the different markets. They also helped us to step up our game from a financial perspective, because for every investor, also the ideas that they have, because they know the investment landscape, they know what other investors for the next stage care about. And they knew that for our Series B or our Series C, what was important. So when we went from our Series A, Series B, the case was about to show that what we've built in the DACH region, in our home market, was actually scalable. And as Marcus said, so within actually a year, we entered 15 countries. And now we are in 22 countries. So we are actually really proven, in a few months, that yes, the business that we have built is scalable, and it's a case for a 10 billion company. And then we have actually other investors who joined in, so like SoftBank for our Series C, where actually in the board they mainly challenge us on the financial side of things. So I think from an operation perspective, now they trust us, they trust our team of 1,000 people with very strong profiles in the whole management, so in the VP layers and the head layer. And now it's a lot about the financial case. How can we actually deliver on our promise, on the growth that we want to deliver?
Thanks, Laura. Side story, because I'm primarily here to host, but it reminds me of one story where I personally know it's time to get off your board. We had a discussion. So would it make more sense to launch in 2 countries in LATAM or 4 European countries, and what are proven strategies there? And I was like, I don't know, right? I've never done this. I can tell you, how to set up an ESOP program and when to hire your first HR manager, but I have no clue whatsoever what it means to take 10 or 20 companies public or launch in 30 countries in parallel. So I couldn't agree more that in an ideal world, there's an expert for every stage.
And I think also, you can consider investors as your manager, let's say. Managers are not there to give you the answer. They are there to challenge you and to actually put you in contact with people maybe who know it. And I think that's one of actually the great assets of our investors, is that they have a huge network of investors, but also of talents in different companies, founders, management level, where we can actually talk with and get ideas and get their experience. And that's one of also the most valuable thing. And when we talk about decisions now, so currently with our board, it's not about should we actually start investing in branding or in performance marketing, but it's more about, okay, there is a company that we want to acquire. Does it make sense or not? What's your opinion about it?
That's now a perfect transition into the investor side of things. What do you think? What's your biggest value as an investor, as a board member? How can you support companies such as Go Student going forward? And also, on that note, do you see any differences between your US and European portfolio? So I'm not 100% certain, to be honest, how your personal investments are distributed, but I assume you have companies on both sides of this planet. Or both sides, there might be even more, right? We shouldn't forget Asia, right? Any big differences?
Yeah, so we see learnings from around the world. We see the same business models occurring in different countries and regions around the world, and those learnings are very valuable for the companies. And what we try to do with our global ecosystem is make connections, make introductions, very much like Laura said, is just there's always ideas, opportunities coming out of the ecosystem, whether it's between the companies or the broader investor or financing ecosystem. And those learnings are very helpful for those companies as they scale. In terms of your question around the differences, yeah, we see similarities and differences. I think that the big thing for Europe is that it's so fragmented, there's so many different regions. If you want to conquer Europe, you have to be agile across those different geographies. That's something that a North American company usually finds difficult to do because North America or the US, single language and a single geography that you can move across the whole country. In Europe, that's much harder to do, and the companies that can do it, great example here being Go Student, when you can go from one country to the other, it's an agility that's extremely difficult to do, but once you can do it, it's very powerful.
Thanks. Before we open up, one final question to you, Henriette. We've seen a couple of big trends when it comes to public markets. We already discussed that companies tend to stay private longer. There's new forms of public listings, thinking of specs and similar models, direct listings, and there's a global competition. So I have to ask you the provocative question, right? In my defense, it was part of the briefing, so you could prepare. Why should a company such as Go Student go public in Vienna and not in New York or like any global stock exchange? What can be your role in this globalized market?
Regarding the trends, yes, we have seen a spec trend, which is not that strong anymore. So, I mean, 500 vehicles globally seeking for companies. We will see. And that was a huge trend. Direct listings was a trend pretty much in the US. It's possible in Europe and in Austria as well. Yeah, and in regarding, that's my favorite topic, you know, it's my daily job. Which stock exchange to choose for companies. And what we do is, I guess there are three main things companies should analyze. It's the visibility of the market for the company on the respective market. It's the trading volume, a sense of liquidity, and it's the internationality. And for Vienna Stock Exchange, I mean, we are a national stock exchange, but we have 80% international flow. So top one is the US, if you may not know that. So we are very much internationally driven. Our main trading members are Morgan Stanley, JP Morgan, Goldman Sachs, all the big names, and of course the two Austrian bigger players here. So they do the trading at Vienna Stock Exchange. And that's one thing, when it comes to visibility, a company like a unicorn with more than 1 billion market value, with this size, you would be in the leading index at Vienna Stock Exchange, top 20. You would not be in any other leading index worldwide, I can assure. So this brings a huge of visibility. And it brings, of course, attention of the market because all the funds and also in the international index provider would invest in you because you are part of this index. So it's a very, very important thing, I guess. You would be number 120 at Frankfurt. You would be number 1,200 on Nasdaq. So I really ask you to do a deeper dive. And this is only the IPO. But the thing everybody forgets is you will be listed after the IPO. So the aftermarket, we have great services for this. So sum up here. Yeah.
Perfect, thank you. I'd like to open up the panel now. Are there questions? I think that was the first hand, that was the second one. Very professional.
Anthony, you call yourself vision capitalists, not necessarily venture capitalists, and if you read through your vision statements of SoftBank, it's all about AI. So I have two questions for you. One is, since there is so much focus on the SoftBank Group on AI businesses going forward, what does it mean for your daily sourcing? Does it mean if you have a company, a startup that has no machine learning component in it, that you're like, okay, no thanks, not for me? And the second question, where are we internationally speaking in Europe, roughly, against the US, against Asia, on the AI spectrum?
Yeah, so you're right, we do have a focus on AI. It's really AI and data. And if we just take a step back and ask why is that the question, the thesis of Masa-san was that mobile internet was the big driver of the last 20 years. And that very much played out. That drove his investment strategy from the early 2000s. And we've seen that the mobile internet, whether it's Apple, Google, Facebook, whatever it is, and all of the broader ecosystem that has come out of that, that has been the big driver for the last 20 years. And the mega trend we see for the next 20 years is that AI and data will transform each and every industry. So that's very much what we look for. And we have 300 portfolio companies, and we think that each of those is a leader with some kind of AI or data underpinning the thesis in their respective niches. And we'll see more of these niches with more of those companies coming out. It does mean that if there's a company with nothing to do with AI or data, maybe it could be a food tech, or it could be something that's more infrastructural and more capital driven rather than being driven by data and information, that we tend not to go for those opportunities. But it's amazing when you look at the companies coming out, how even in those sectors, it could be in a food tech, right? That actually, when you really look at it, that AI and data are transforming the processes they have. So in life sciences, for example, massive innovation and pretty much in every sector. And so it's a minority of the opportunities that fall into that bucket where we'll say it's not AI and data, therefore it's not for us. Your second question around Europe versus other regions, again, I think we're doing much better across Europe. So we've seen this, as we said earlier, this massive explosion in the number of companies that are fitting our criteria coming out of Europe, and that's because they're making the most of those capabilities. And if we think about the talent, right, there's a shortage of engineering talent, of software talent around the world. Places like California, there's a dearth, and even some of those American companies are having to come to Europe to find the engineering talent. It could be in Israel, it could be Belarus, Romania, Turkey, wherever it may be, that there is a lot of expertise on the ground here. And I think the educational underpinning of Europe is great, because across many countries in Europe, there's fantastic education. And as you start to focus on that technology expertise, it's a real strong underpinning. So I think the future for Europe is bright here.
Thank you. I think there was another question in the third row. I love the microphone.
So I have a question for Laura, that now the co-student is Unicorn in Austria, that how active are co-students and our Unicorn founders in Austria to reinvest their earnings into new startups?
So just to make sure, so you want to ask if we would invest our earnings in new startups in Austria and outside?
Yeah, right? Especially if the shareholders of the company want to sell shares and have money. Do you is this movement starting where founders, successful entrepreneurs are investing their money into as angels at the end of the day, right?
It's a very good question, and I think also that what makes the difference of a country compared to another is that when you have actually really big exits, and then all the founders, but also the employees and the existing shareholders, they start actually investing in new startups, and that's where you build actually the whole ecosystem. And this is definitely something that we care about, is how we can actually build this ecosystem and put back actually into it. And I'm from Belgium. I always say that Belgium is to France what Austria is to Germany. We are the cool kids. So it's not about small, it's about being there and showing what we've got. And I think it's actually also very important, and that's one request that I would have actually for the government, is to show actually who we are, and that we are there, and that we're here to invest in startups, and that we are going to be the one bringing the next biggest amount of unicorns in the next years.
Also, to be very honest, I think, Connie, you've said it before. There's this misconception that you need a lot of money, right? When we do rounds together with angels, it's way easier for us to structure the round together with operators, angels that have decades of experience in a certain space that do like 25K tickets, than like super angels investing 500K but providing just the money, right? So I think value add is increasingly important, and especially operators that have gone through this and have expertise in one sector are very valuable business angels.
And I think also in general, when we select investors, we don't just select investors because they give us money, but because they bring us expertise. And I think people who have been like ex-founders, they have also this the operational expertise, the execution that they can bring back to other companies and bring them from pre-seed business angel side to the Series A.
Perfect. So I think we have time for one more question, if there's any. If not, I'd have one. But we want to give you the opportunity. That ends in 3, 2, just in time.
Hi, good morning. My name is Lisa, and thank you, Anthony, for mentioning Israel as one of the countries that has the mind and the knowledge. I actually flew from Tel Aviv today in the morning to be here. Very, very privileged to be on this face-to-face event. And my question is, Israel had 31 unicorns issued this June. And one of the main differentiators that helps Israel to go global and to make sure that technology actually reaches the market is what is called customer success management, which is basically the way to do alignment between business and technology.
Yeah.
And I wonder how Austrian startups utilize this knowledge today to increase the number of unicorns annually.
If I get the question right, I'd probably direct it to Laura and ask how important customer success, i.e. retention, keeping your customers happy, is for you as a growth tool. Did I sum that up in the right way? Okay, help me out here.
More or less.
Okay, more or less.
Yeah. I would like to understand what is the status today in the minds of the local startups.
Thank you.
I mean, if you think about because for us, customer success, and maybe related to Marcus, the way you reformulated it. So for us, we can split kind of the company growth into areas. On the one hand, you have the acquisition side, getting the first customers in, showing the product, showing what are the USPs, why they actually adding value to their life. And then we have actually a huge team of customer success manager who are retaining our existing customers. And they are really focusing on the relationship, on the loyalty of the customer, really that they understand why they need to stay with us, why Go Student is actually part of their life as a habit. And this all retention topic, also upsells and so on, which is actually the second phase of growth that we are now focusing on.
Thank you. So we are perfectly in time. We have 3 minutes left, and I asked you to think of one final remark beforehand, and that is, Christmas is coming soon. People in Austria usually don't like to believe that, because I think yesterday was the last day of good weather, and now we're finally entering autumn, so Christmas will be here soon. I think in London that started earlier, right? After all 3 days of summer, you entered autumn. So if you'd have one wish for the European ecosystem in order to further catch up, we've talked a lot about recent great developments, but there's still a long way to go. What would be the one thing that needs to change? If you had one wish, what would it be? Very briefly. Whoever dares to
go first. My wish is more visibility outside the bubble or outside the secret circle, and more female role models that attract other females to invest.
100%. Thank you, Connie. Next.
Well, my wish would be that it is as easy to invest in European entities as it is in the US entities. So I think that would make our life much easier, and we wouldn't have to then go for US inks, which is now becoming pretty hard as an Austrian VC because of certain details. So I hope that could change as well soon.
So more female role models and less bureaucracy. What else is on our wish list?
Modernizing and easing all the regulations throughout the funding cycle in Europe. harmonization.
Okay. Second wish that goes into the regulatory direction.
A company is nothing without its employees, and I think also if we want to be more competitive to countries like the US, is how we have actually better incentives from a stock perspective, stock option perspective, and taxation for employees to attract them at the early stage when we cannot pay the salaries that they request.
+1.
I think plus 172 in this room.
Yeah, and I'd like to say we're huge advocates of diversity as well, and I'm really pleased to be outnumbered on this particular panel. Probably I would say is just more risk appetite, more risk taking, more willingness to accept equity and grow businesses from an early stage to have big ambition and grow big.
Thank you. We're perfectly in time. I think it's a very long wish list. I think, Nina, you said it before, that you hope that we'll be in touch with the minister and his team. So there are a few to take there. Thanks, everyone. Thanks for taking the time. Thanks for discussing with us. Thanks for your questions. And off we go. And now I think Nina and Laura are taking over again. Thank you.
Yeah, thank you so much for letting us being part of this insightful conversation. It was really exciting to hear the different stages of the funding life cycle, how everything works together. And in the end, it's always about the people, and it's always about the personal connections you make, and also it's possible to make them here. So also in this room, we have different kind of investors. Maybe you want to raise your hand if you're an angel investor. Who are the people coming from VC funds? Also a few ones back there. And private equity. Yeah, great. So you already see people probably which you would need to connect with. So the next break is the perfect time to do so. Really try probably also to talk about the next investments which you could do also together. And now we're gonna see a short video of our partner ABA, and the networking break is also hosted by CMS. So now it's time for networking.
Mountains and an amazing culture, Austria has also become a major tech location in the heart of Europe with a very high R&D intensity. Go Student or Bitbanda, or Has to Be as an example of a recent exit, have already benefited from the advantages of Austria as their startup hub. The startup and tech location Austria is definitely worth a closer look. We as Austrian Business Agency are your first point of contact to explore it further. We answer all your questions individually, tailor-made and completely free of charge. ABA, your easy access to Austria.
Okay, welcome back to the room, everyone. Please find a seat. And make sure also that everyone you've been talking on the outside is actually coming in again for our next point on the agenda. Wonderful. And also to the people standing in the back, if you're looking for seats, there are quite a few available here in the front, so don't be shy to take that. Good. Laura.
So I would say we kicked that off again. And Nina, I hope you have enjoyed the networking break and you also had some great discussion about investments in innovative companies and also the increased awareness that we need changes on the regulatory side.
Yes, so I'm very happy to see how much the place is buzzing already. I would also ask you to basically lower down your voices a little bit now because we want to make sure that the next program point gets the attention it deserves. But we're also very happy to see that you are in networking mode already. So yeah, we really appreciate that. And also looking back at the last few hours that already happened at the event, Laura, what were your main takeaways that you have made in the first part?
My key takeaways were coming especially from our first panel and also from the keynotes before, because we heard once again we really need change, and we also need change from the regulatory side. There are things which are really hard and which could be changed, but also that all of you who are here in this room can make a change, and we can all do something and also talk about what we need different and how we could work in a better way. And it was also exciting to hear, and also when looking in this room, we really need more female investors. I mean, that can't be the end, right? I think this is an enormous potential, and we should all do more to make it more attractive here. And in general, there is enormous potential in Europe. I mean, we heard it before, there is talent, there is capital, there are attractive cities to live in. We really need to use that potential also, especially in Austria, to create companies and also to fund these companies. So I think, yeah, the potential is here, we just need to get started.
And that already brings us to the next point in the agenda. It's the very first fireside chat of today. And we are looking forward to a discussion between two very critical voices, I would say, and I would also encourage you to actually be critical. So we have invited two of the brands that have been shaping the Viennese and the Austrian ecosystem for the past months, one of them even for years, I would say, actually both of you. It's on the one hand Speed Invest and it's on the other hand Bitpanda. And I very much invite Eric and Markus to the stage to really give us some insights into how it is to fundraise in a culture that is not particularly willing to take risks. The stage is yours.
Thank you. It's me again. Promised the last time for today. After that one, I'll focus on the coffee. Thanks, Eric. Thanks for taking the time.
I just realized I have the same stuff on the picture.
That didn't happen on purpose?
Yeah.
I mean, I think it's fair to say that probably everyone in the room knows Bitpanda. Probably not everyone knows your story. I think the title of that fireside chat that is not written here is, I think, to raise 1 billion together. And the main idea behind this that we at Speed Invest roughly have 550 million in assets under management, and you have raised a shit ton of money lately.
We have more asset under management, yes.
It is 100% accurate, yeah. You've raised, I think, 170 million in Q1, followed by another 250, 260 less than 6 months afterwards. So, I mean, this is a tremendous growth story. Maybe you can, introduce the story of Bitpanda a bit to us.
Yeah, the story in the past year was a bit different than the years before. So before, at the beginning, we were just Paul, Christian, and me, and then we were pretty much using our savings to put everything in the company until we ran out of money. The good part was, at this time when we ran out of personal savings, I would say, we were already profitable. And then it was easier on the personal matter, let's say it like this. Because this is about fundraising, what we did was in end of 2016, beginning of 2017, we did a very, very small, let's say, seed round from faces that are probably also in here. It was more like a Viennese seed scene and a good investment banker from New York. And it was just a small round. It was like 700,000, and it was purely based because we were growing so fast at this stage. Not in terms of last year, but I'd say at the rate of 2016 that we needed liquidity, you know. So and then the first real round was last year, yeah. Last year, and then it got big quite fast. And the good part here was that we were able, also with the help of Stefan from Speed Invest, to get in contact with really like I would call it the Champions League of VCs in London and the US. And we were able to choose pretty much who we are working with, and we took the right partner because otherwise we wouldn't have done 3 rounds in a row with the same guys. You know, it's really the perfect partners.
And what did change ever since? Because I mean, when you take investors on board, they want to have a say in certain things. I think it's fair to say, without going too much into details, that you still are very much in control of the company, like practically, but also in terms of the ownership structure. Yep. So you might be a bit of a special case. But what were the biggest changes ever since you've onboarded growth investors?
Regarding the control and the say in the company, nothing really changed. They are very founder-friendly. We still have the majority, which is also very rare at this stage, I would say. And then we also got a lot of input from them. So it really, really helped us also in regards to, I mean, they have seen this several times. They have seen so many companies that went big, that already IPO'd in the US, that are in their portfolio. There is a lot of network. It's like it's not a bullshit, you know. Like their network, I can call them anytime, and it's like, hey, I make you an intro to whoever in the world, pretty much. They know all the people, and that really helps a lot. Plus, you get also because of the PR and you see who is investing in us, you get completely different talent. So you have completely access to the whole talent pool, I would say, in Europe. Yeah, so that really helped a lot. That was also changing.
I think it's fair to say that money is one thing, but brand recognition and network is probably like equally important, especially for you, because I think, I mean, that is probably the biggest understatement I've heard in a long time, that it's rare that founders that have raised, I don't know, 400, 500 million have still the majority of the company. I think that's unheard of. I've never seen that before, and it's a really unique story. And I think the main reason, correct me if I'm wrong, is you made money and focused on nailing your business model really quickly, and that put you in a great position.
Yeah, we bootstrapped the company because we always had this saying, you know, like we're using our own money to fund this company. We have to make proper revenue as soon as possible, or as fast as possible. And every time we build a product or a service that is not having its own revenue stream, it has to support something that already has a revenue stream. So we always build like this, and we keep building like this.
Maybe moving a bit towards the financing ecosystem in Austria. On the first panel and also in the morning keynote, the common thread was that there's not enough capital in Austria. Provocatively speaking, or let me frame it differently. 5 years ago, US investors would have said, look, you need to move to the US, you need to enter the US market in order to attract big institutional investors from the States. I think it's fair to say that this has changed. When we look at you, also the AVCO students, the Adverities, it's usually US investors, sometimes investors from London. So it seems that for the best companies out there, there is enough money because growth investing is really global these days. Would you agree?
There is absolutely enough capital in Austria for early stage, but not for late stage. Like there's like zero capital for late stage, pretty much. But before, like when you start, there's so many angel investors, there's a lot of seed capital, there's a lot of early capital, there's Series A capital, but then it stops.
100% agree to that. And in the past, we said, look, you know, as an Austrian company, you can't really get funding because of that.
But it's not an Austrian problem. It's a European problem. This is the same, exactly the same answer I would give you in Germany. Or, you know, like there are no big funds because we don't have the structure in Europe that there is proper capital. The biggest problem we have here, for example, okay, when I look at the LPs of our investors, of the biggest, let's say also VCs in the US, who is giving them the money? That's pension funds, college funds. Like here, they are not even allowed to do this. What is their return here? This is a joke. This is a complete waste of money that we have these pension funds here. They have to be restructured. You know, they also. I mean, actually, I don't think they have to be restructured. I think that has to go away completely. Like, I think we have to have a model where people also invest into stocks, like a 401k in the US, or like a British model that will also increase the ratio of people owning stocks and participate in the capital market. But pension funds just doing the most conservative investments when there is no interest in the market. There's no wonder why, you know, like, and there's the money.
Would you agree that while this 5 years ago was a problem both for entrepreneurs and the taxpayer, it's less of a problem for entrepreneurs today because, you know, you can raise money from US investors, from the global funds, but it's still a problem for the taxpayer. And now what we do is regulation, FDI clearance, and so on and so forth. But that is what strikes me most. On the one hand side, there's zero incentive for growth funds in Austria, but then at the same time we want to keep startups such as yours in Austria, right? But when you then get money from US investors, and honestly from where should you get it, because we just established that there's no money, we have like a very lengthy process, and from a political POV we are afraid that, you know, US investors will take over and all, like, you know, the shareholder base, or the shareholder base as such, will become mostly American, and that is where I don't have an answer. Because I mean, on the one hand side, there's no money. On the other hand side, we are not really happy when U.S. investors invest.
Yeah, you can't counter that with, yeah, we take investment control rules or something. You actually have to establish an environment where all the money that is parked, for example, in pension funds, can literally invest in Speed Invest or in other funds in Europe, and actually make a later stage fund out of it. As long they are not allowed to do it, that won't happen. And if you just put rules on it.
Yeah, that's actually a crazy thing, because when you talk to, I mean, I know that we have a few guests here today from CE countries, and you know, one message I got, and it's still very present, was that, you know, in Austria you'd have the money, it's just parked somewhere else and they're not allowed to invest it, whereas in other countries the big challenge is that, you know, the money isn't there. So you'd think it should be easier to mobilize existing money than to get like additional money into an ecosystem, but still it seems to be tricky from a regulatory POV.
Yeah, the problem is that we here have the mentality not to make any mistakes. So yeah, there could be some, you know, we could make a loss, you know, don't invest in the stock market, it's very risky. So it's a mentality thing, and also I also understand the politicians, because they don't want to be seen as the ones, yeah, you see, it went wrong, it was your fault, you know. This is, but on the long run, if we take these measurements and we see across the world, and especially also not so far away in the UK, it's working perfectly. So I think we can literally copy this system.
How could we tackle that from your POV? What could be first steps into that direction? Because I think all of us, or most of us in the room, share the sentiment that, you know, there is money, but, you know, struggling to mobilize it.
Allow institutional money to be invested into VCs. That's it.
Regulatory changes.
Yes.
Maybe on that, would you, like, you know, you mentioned brand and network. of US investors. Would you say that, like, if there would have been an Austrian growth fund, and you would have had the possibility to like, take 100 million from an Austrian growth investor, would that, like, what would have been advantages and disadvantages compared to, like, a US fund?
I don't see any advantages just because you are in a certain country. You take money from, if you can choose, if you're lucky enough to choose which VC you get the money from, you take the ones that are founder friendly, that have a great track record, that can help you, and it doesn't matter which country they are from. I really don't care. It's just like, it will never be, oh, they are also from Austria, I prefer their money because they're here. This will never be the case for nobody. It is just to be that, let's say, Austrian capital can compete, start competing. Right now there is no competition because you're not playing there. But so you can actually start to establish your network there, and it will be hard at the beginning, because when you're competing with the big VC funds and in the US, their track record is a bit different, So it will take many years until you can come up with to the same level.
But you got to start somewhere. What struck me is that essentially what you said about the funding ecosystem on the startup side, that there's like plenty of money in the early stages, and then, like, growth capital is tricky, is also very similar for us as a fund. When we started off 10 years ago, there was a lot of support. Many entrepreneurs, C-level executives supported Speed Invest in the early days. Also, AWS was like, without AWS, it would have been super tricky to get it going. But now, again, on the institutional side, there's a few players. I mean, Erste Bank being one of them. But when I look into our set of investors, we are now doing exactly the same on a global market. For the next fund, we reach out to all those pension funds and like, institutional investors from the US and the UK, because they've also seen what, like, everybody shares in the room, that Europe is a hot market. There's great companies coming from Europe, so they want to invest more in Europe. But I find it to be a pity, again, that also on our LP side, it's getting increasingly US focused, because this is, again, where the money seems to be.
And it's also a mentality thing, right? I mean, they're used to do this since ever, And when you just start doing this, you cannot expect to see big changes within years, and it will take a lot of time and will be very, very frustrating. But that's the result of a very, very conservative money policy or investing policy over the past decades. So,
what is the crazy thing about this is that, the Austrian startup ecosystem is actually great performance-wise. We did this analysis where we have roughly like 230 portfolio companies in, I think, 27 countries, and they produce like returns, or TVPI, right? Book value, first and foremost, in the first years. And we benchmarked those numbers of like our global portfolio against our Austrian sub-portfolio. And guess what? The Austrian sub-portfolio like outperformed the global one. I mean, obviously that's thanks to you, thanks to the GoStudent guys, but also there's the Verities, Planradars, Refurb. So there's so many great companies, but again, most of the growth investors, or 95% of the growth investors, are coming from the US.
Yeah, honestly, I don't think this data is relevant because the sample size is too little. So therefore,
Yeah, I think it's 30, 40 companies out of 230. So I think you can see that the startup. So usually we
if you can say the same thing in 10, 20 years, then okay.
Yeah, hopefully, yeah.
No,
I'm just saying, obviously it's a bit simplified, but I want to make the point that we don't need to hide.
No, that's for sure. But I don't think that Austrian founders or companies are better performers than the rest of Europe or something. It's literally just random numbers on a very low sample size.
100%. I'm just saying what we usually do is we try to make ourselves small, and we try to downplay the fact that we have a ton of great companies in Europe.
We're not shittier than other people. That we can say for sure.
Or equally great than other people.
Okay.
Maybe one last point I want to quickly address is a topic that I'm aware that is very dear to you. Talent and talent retention and getting talent into Austria. Have you seen any positive developments on that side?
No. Yeah, I mean, talent. We have created quite a good employer brand, I would say. So it's like a pull factor, and also Vienna is also helping. That it's a great city to live in. Honestly, if our company would be in Linz, it would probably look very good. It wouldn't look very good, to attract talent. Hope I don't offend anybody here, but no. So and you're probably referring to the red card, and there I already said in some interviews we gave up. So it's like we're opening now at first 8 offices. Now we decided to open 10 offices across Europe. Yesterday I was in Milan in the new office. And we are just getting people from the US that need a red card, for example, to Amsterdam and London. So yeah, until finally is kicking out the MA 35.
I think this is another one for the wish list. I think a lot of people are lobbying hard. Let's hope that we see some progress there. I think a lot of great stuff is happening. I mean, you being one of the most successful cases in Austria, but at the same time, a lot of stuff that we need to cover. Hopefully, we'll see positive developments there. Thanks, Eric.
Thank you very much.
Yeah, once again, thank you for letting us be part of this conversation. And we're also hearing, once again, there would be a great Austrian company trying to create places for people to work here, which is not possible right now. It's a little bit more difficult than it would need to be. So once again, yeah, one more point on our wish list. And now we're going to see a short video of our partner, the Vienna Business Agency.
Ich habe schon oft.
From the sausage with cheese after the opera, to the always look good, waterproof mascara. From ice cream and dumplings, perfectly combined, to a being inside you, the unconscious mind. From the jumping and dancing self-tan teen, to the sewing machine. From a place between art with the world's biggest bedroom, to my Wi-Fi is good. Thanks, the spread spectrum. From really crispy schnitzel and the schmaltz it was dipped in, to this place of preparation. You know, fitted kitchen. From many bright colours and the paintings with the boobs, to the 3 minutes daily, toothpaste in a tube. The inventions from Vienna, this original blend, it has always been there, from crazy to grand. This is Vienna, where future is tradition. From fiacre to e-bike, from Palm House to Tech Hub, from coffee house to co-working space, from Lipizzaner to unicorn, from vision to reality. With the business agency Vienna.
So, it's already time for our second panel of today. And when we are looking how to solve the greatest challenges of all times, like a climate crisis or a pandemic, technology definitely can be the game changer and also is playing a big role there. Instead of only focusing on profits, we can invest in companies which actually are creating change. I'm saying a warm welcome to the panel host, Lisa, and the panelists, Liv, Cyril, Xavier, and Gabriele. Welcome to the panel, Purpose Meets Technology.
So, here we go. This looks really like a band that is coming to the stage. Thanks for joining me. Nice, so everyone found a comfortable seat, great. So, before we start, thanks that so many people are here, because yesterday at our dinner conversation, we had sort of a bet going on, because I was afraid that actually a lot of people would leave when we start talking about purpose. But the good news is purpose is becoming more and more important, which is not only showcased by this extremely international crowd of speakers that we have here, but also because of your big interest. So the expectations are now a bit high, because I think we need to really well demonstrate that purpose is something that is becoming more and more important, and also how we can actually measure purpose, what it really means, and if we can make profit with purpose. So that's the outline for today. Before we start, we're going to have a brief round of introduction. I'm going to be impolite and start with myself, and I hope that's fine for everyone. So my name is Lisa, and similar to Marcus, I spend my nights working for the Austrian Angel Investors Association, sometimes with Marcus, and the rest of the team. My day job is, well, running an organization together with our lovely host, Nina, which is called Female Founders, and that is trying to bring more women and diversity in general to the tech world, and especially to the investment world. And during the weekends, in my free time, I also have the honor of advising our Minister for Economy and Digitalization on what to do about the startup ecosystem. Sometimes more successful, sometimes less successful. I know the wish list is long, we're going to tackle the things. So, that was it from my end. I think we're going to start with Gabi, because she's also one of our local heroes here. Gabi, thanks for joining us.
Thank you. Hello also from my side. My name is Gabriele Datzberger. I'm from the Vienna Business Agency and their Director of Startup Services. So all issues about Startup City Vienna and international connection and networking is in my field. And in addition, I'm CEO of Vienna Region and also member of the board of the high-tech incubator in it. And we're really keen to support startups and founders here in Vienna, and also invite international startups to come here with our soft landing programs.
And thanks for bringing this amazing video to us, because I think from Lipizzana to unicorn is really where we have to go as a startup ecosystem.
That's true.
So, freshly in from Frankfurt, representing Germany, so to say. Yes, already pointing fingers here, sorry. I mean, that's obviously the thing, because it was already mentioned in the first panel. Leaving jokes aside, Xavier, it's a pleasure that you're here. What are you doing and who are you?
Well, thank you for inviting me. My name is Xavier Sarras, and I'm a double evil because I'm Franco-German. So for the Belge, I'm the evil, and for you guys, because I'm German. Anyway, I used to be an agency entrepreneur. I built marketing agencies for 25 years of my life, helping crisp companies sell more crisp boxes, and shampoo companies sell more shampoo bottles, and car companies sell more cars. And after doing that for 25 years, I realized that needs to change, definitely, because we're in a place that needs help, right? We all know that the planet is facing its biggest challenges, and therefore I co-founded 4P Capital, which is short for For Purpose Capital, which is an early stage VC investing into impactful companies.
Nice. So the first question is going to be directed at you, but we're going to move on with that. So, freshly in from Luxembourg.
Hi, Lisa. Good morning, everyone. So my name is Cyril Guifes. I'm French, based in Luxembourg, indeed, and flew this morning from Luxembourg. So I'm heading the social impact team at the European Investment Fund. The European Investment Fund is the EU body, part of the European Investment Bank group, and the EU body in charge of increasing access to finance for European SMEs. In my particular capacity, we act on the market that's relevant to us today as a fund of funds. So we're investing in funds, impact funds, among others, that invest in companies, startups, impact companies.
Nice. So I can already say that the last part of this panel is going to be a call to action for the audience, but I think we can already say for all the fund managers out there who are raising funds, I guess you are the go-to person representing the European Investment Fund. So a lot of people will be talking to you today.
Spotlight.
Last but not least, in from Estonia, and we just met a couple of weeks ago, and I was deeply impressed by the Estonian startup ecosystem, and especially by the investment ecosystem, because they have a lot of VC funds, they have as many active angel investors as Austria, or even a bit more, and I think there's something that we can learn. And also, yes, you do have a couple of more unicorns than we do.
Hi.
Hi.
I'm Lev. Yes, as Lisa already said, I'm from Estonia. Thank you for inviting me. Estonia is sort of land of unicorns. We have less than 1.5 million of population, and we already have 7 unicorns. And I think one more will join them quite soon. I'm the president of Estonian Business Angels Network. I also have a honor to represent Estonia in European Business Angels Network, wearing some more hats in Estonian startup ecosystem. So yeah, thanks for having me here, and I'm looking forward to great discussion.
Nice. So thanks to everyone for joining us, really, because this is not only a super international panel, but also those people are representing different stages of the funding ecosystem. And this is why this discussion is going to be especially interesting and important. Before we start with the direct discussion, I would like to say one more thing about Estonia and something that our governmental representatives that you can learn. This guy can tell you right now, right in this second, how many active startups there are in Estonia, how much, well, economic growth they are generating, how much taxes they are paying, and how many jobs that they've been creating. And I think bringing data to ecosystems is really helping to tell the story of why startups actually matter and why they are not just a very small niche of our economies. Having said that, moving on to our first question, which is trying to be a slightly provocative question, because also we at Female Founders and also other organizations active in this topic related to purpose often get one comment from investors. And this comment is, so as an investor, especially as a VC fund, I'm here to make profit. Therefore, naturally, I'm investing in the very best companies out there. So why would I invest in a company that is driven by purpose? Because this naturally limits my deal flow. So that's the question and the statement that we often get. Xavier, what's your point on this, running a VC fund focused on purpose?
Well, you said it. You run it on purpose, right? So investing in purpose will often lead you to financial returns that are above average. We call that the lockstep, and it's being observed out there. So if you, for example, look at statistics done by the Global Impact Investing Network that do an annual survey every year, 88% of global impact investors report that financial returns were above their expectations, and they set market rate expectations for impact investing. I think what someone needs to understand is the ecosystem, right? So what people consider impact investing sometimes is more the philanthropic donation side of impact investing. Then there's ESG compliant investing, which is something completely different. Impact investing of the new generation, as we tend to call it, is where financial return and impact return go hand in hand. And honestly speaking, we don't only have the biggest challenges of our lifetimes, I guess, but we also have the biggest opportunities. And if you look at those markets, they mostly are trillion-dollar markets. They're not billion-dollar markets, and that's what's also making it attractive from a return perspective.
Very valid point. So I feel that everybody wants to say something and comment on this. So Gabi, I think you were the first one who wanted to say something about this, because already...
Maybe I would like to add that what we see, we have really founders coming with an idea to us until startups. And we deeply believe that if they don't think about ecological and social impact of their companies, they will not be successful in the long run. So focusing just on ecological aspect and CO2, we know also just from a business point of view, they will not be as successful as they could be if they take this into account. And I think this is very important, and this should be also a trigger, I think, for investors, because in the long run, if you look at the regulations that will come, for sure, it's a must.
Mm. And as you mentioned, so you should look at the companies and what they're doing from an ecological and societal perspective. Is it only about not harming the environment and not bringing negative consequences to our societies? Or is it really, are we already at the stage where we talk about bringing positive impact?
Maybe just to add how it is in Austria, we see that, for example, 67% of the Austrian startups are considering ecological aspects, and 27% have it as a primary aim. And this changed a lot over the last 10 years. And I think this is development, but you always will have the broad range, and the problem of greenwashing will come very much in the next years. But we need to really define standards and certifications that give a certain trust to some standards.
Mm.
Can I jump in just quickly?
Yeah, sure.
Sorry, but that's the fine line that everybody needs to be aware of. ESG compliance has nothing to do with creating positive impact. ESG compliant is do no harm, that's fine, and it should be that way. And every business model that is not impact at core should do that, because there's no way around it. And there's actually also regulation coming that's helpful with that regard, for once. But impact at core business models are the ones that create positive impact by their business model. And that's where the difference really lies.
So, Cyril, what's a more European perspective on this? As you're with the EIF, you're probably seeing a lot of business models, a lot of active players in the investment ecosystem. Do you have some data points that you can share with us that are proving, again, what Xavier and also what Gabriel was saying, that it's really about having this purpose at the core of the businesses and making sure that they are uniting profits and purpose?
We do, and happy to share some of these data points. I'd like to also mention that, to flip the remark you started with, it's also fair to say that investing with the sole purpose of generating financial performance, so financial performance for the sake of financial performance, also is certainly what led us in the current situation. So with this, I'd like to mention that to be slightly cynical, that investing in impact companies is a commercial opportunity, because as you just said, Xavier, it's not, impact investing is not about reporting standard, it's not about the way you are transparent on your financial information, on your portfolio to investors, but rather about finding solutions to the world's most pressing problem, be they social or environmental. The public welfare budget cannot do it on their own. Private sectors, corporates cannot do it on their own, so we need innovation. And startups, entrepreneurs, as an expression or as a direct out expression of civil society, is a very powerful leeway. Also cannot solve it on its own, but a very powerful leeway to make sure positive impact can be achieved on sectors such as education, access to healthcare, employment, social inclusion at large. So impact investing is not a sector, it's rather an approach. In our view, or an investment strategy. And in our view, slowly but surely, impact investing is certainly going to move from a niche market within the broader venture capital ecosystem to a best practice that will, over time, become the norm. And when we, to conclude and indeed share with you some data points, so we at EIF in 2013 raised the first dedicated impact fund of fund, 243 million, the Social Impact Accelerator, now fully committed across 18 funds in 9 countries. We had, when raising the fund, an ambition to generate a 7% net IRR to our investors, the fund of fund LPs. And 8 years into the fund of fund lifetime, we're now above 1x in terms of TVPI. The value creation in an impact portfolio, at least that's what we see, perhaps takes more time than in an early stage pure take VC. But fact is, and that certainly has to do with the fact that companies in portfolios perhaps have longer financing rounds or longer time span between 2 financing rounds. So not only are we seeing that we are going to achieve this ambition back in 2013 of a 7% net IRR, which is, I think, ambitious. We're now raising the successor with increased ambition in this respect. And finally, we've developed a dedicated impact measurement methodology that is not a reporting tool, but an alignment of interest tool across the value chain. And I'm happy to get to that later in our discussion. We see a very strong correlation between financial performance and impact performance. So we actually see that the vision that we had for impact investing earlier in the 2010 decade is actually materializing, and materializing fast.
Well, thanks for sharing that numbers. And I especially loved what you said, that entrepreneurship is the expression of civil society, and therefore it would be nice to have also smart regulations who are supporting this. But that's obviously one of the topics that we're discussing all day long. So moving on from the EIF's perspective and the VC and the government's perspective to some extent, or public perspective, to the angel perspective. So Leif, being super active in Estonia and also on a European level, how do you think, or what do you see, how do angels feel about this whole purpose discussion? Do we sort of still see impact investing as an asset class? Where Cyril was just saying, okay, we need to move this in a different direction and this should be part or an essential part of every investment decision? Or is there still this strong differentiation between that's impact and purpose and that's profit? And is profit still more important than purpose?
I would say I am observing a big shift in this regard. Like you said, maybe even 2-3 years ago, there was like, okay, impact as a different sector and purpose companies as a different sector. Now I'd say as an angel, if I see a startup that I'm considering about investing in, if I do not see them being, at least on some extent, purposeful, I'm a bit worried about my investment, money-wise. Because they will very soon have a big disadvantage over competition who are purposeful in the same sector. So it's not, in my opinion, it's not a separate sector anymore. It's just one of the check boxes in your Excel sheet when you do the due diligence of the startup.
Would very much agree on this. And I also see that this transition is happening, and I think we also see it within the Austrian Angel Investors Association, that this is becoming, as you said, a checkbox, and it's one of the most essential criteria, to be very honest. So focusing on this, I was wondering in the preparation and also in the discussion that we're having with other investors, if, and as you mentioned, this world is facing so many challenges. We see bad news about crises, well, almost every day, sort of, and we sort of have the obligation to do something about this. So should investors, so really the people with money who have profited from a very capitalistic and profit-oriented system, shouldn't have the moral obligation to actually do something about these challenges and exactly invest in those companies that are solving the challenges and that are hopefully creating a better future for all of us? Whoever wants to go first with that question. Sorry about raising the morality point, but obviously that's a discussion that is hopefully very valid.
Maybe what we are doing, we are giving grants, we are not investing, we are giving grants. And here, since 5 years, there is a criteria that you get bonus if you have this social and ecological aspects in your mind. So this is where we have a trigger in order to give such projects a better chance to get some money or not. If you can regulate it, I'm skeptical, but I think it's really, I deeply believe that in the long run, it's a business decision that you have to do it, because also clients and the people are more skeptical what I'm buying, what's the background, do I trust this privacy and security issues, etc. So I think it's also a business need to do so.
And maybe to add, I don't think we need to have a moral discussion, to be honest, because it just makes sense, right? And I'm seeing a lot of family offices switch already in their allocation strategies, especially as next generations pick up, because it's totally a next generation thing. I mean, this whole Greta movement, of course, that all woke us up, yeah? But that really happened. So the young people, the young generation that are taking over the family offices right now have that on their agenda. It's happening. So I don't think we need to have like a moral flag, oh, you need to do this. It makes sense from a business perspective. It makes sense for the planet. It makes sense for the people. It makes sense for the investors. Why not do it, right? So that's my view.
Does somebody want to add something on this?
Perhaps adding that obviously a major drive behind the observed growth of impact investing and trend around and buzz around impact investing is obviously the investors' appetite. But interestingly, it is also very remarkable that in Europe, first, more and more entrepreneurs leaving bright business schools or talented entrepreneurs at large or talented professionals at large want to become entrepreneurs. That was not the case 10 years, 15, even less so 20 years ago. And now adding to the growth of entrepreneurs getting to the market with a product and or service every year, out of these entrepreneurs, more and more are actually, as you just said, driven by purpose. So obviously, you can generate impact if your business model is solid, if it grows and can scale, obviously. But putting this or combining, embedding within your business model a solution to a social or environmental issue is something that we see more and more, and surprisingly, even in the deal flow of not necessarily impact-branded VCs. The deal flow is way more than it used to, and still, I think, way less than what it will be, composed of mission-driven entrepreneurs. And to me, that's also a sign or a symptom of this awareness raising that one can hope has finally happened.
I much agree. So following to what you said, there's one very obvious question. So 10 years from now, or even 5 years from now, maybe it's 20, let's see, will we still see companies that are mainly focused on profit and don't follow a purpose-driven mission? Will those companies still exist? And will people still buy the products? And will investors still fund that kind of businesses?
I can start. I think we will not see the confrontation of profit and purpose. I think it will just become, like purpose will become a natural part of getting profits. So I do not really see any conflict between these two, but maybe other panelists have another opinion.
Well, I think that having in mind the world we live in, there will still be such companies, I would expect. But it will be very interesting to look at the evolution of the breakdown between so-called normal companies, provided such a thing exists, and mission-driven companies. And I'd be surprised if it stays for long as it is today, which is already today a huge progression compared to what we saw 10 years ago.
Gabi, you want to add something? Or just?
Maybe, I think there is also a topic which is in a more general level. We call it's digital humanism. There is a manifesto dealing with this discourse, what does technology do with us as a society and with us people? Because looking back, when the internet came into existence, okay, there was no regulation at all. Nowadays, we see we have many benefits out of that, but there are also things going on. Maybe we should ask if we want to live in a world like that, with monopolism, filter bubbles, unconscious bias in AI, etc. And there are solutions necessary in order to overcome this, in order to live in a world we want to live in. And here, it's really the mission of the city of Vienna to foster this discourse, and not only between technologists and investors, but also humanists, because it's really a broader discussion needed. And at the moment, this discussion is going on a global level. There is a network really discussing these issues with philosophers and different professions on a very academic level. And what we are now trying really to do at the Vienna Business Agency is to break it down and see, okay, what does it mean for business? Which means, okay, should there not be a standard about AI? And there is one certified ethical AI algorithm now existing, certified by IEEE. It was developed by the Wiener Stadtwerke, which confirms a certain quality of ethological criteria taken into account in this algorithm. And I think there is a lot to do in order to come into this direction, in order to have a world also my kids want to live in. And I really think that also investors should think about that. Okay, is this something we want to have in our world? And does it shape the world in a way we want to live in? I think it's a very philosophical discussion now, but I think now we have really to think about that as well, because now we are laying the directions for the next years.
Couldn't agree more. So as we're now starting this conversation and moving it more in the direction of what actually is purpose and how can we define this, I have one question to the audience so that they're also getting a bit active before the next things come up and eventually everyone is ready for lunch break. So who of you in the audience has a clear definition of purpose and could say in one sentence what purpose means for her or him? Yeah, don't be shy, raise your hands. We already have 2 hands out of 150 people. Okay. So I think we have something to do here and give a definition or try to give a definition of what purpose actually means and also dive into this topic of how can we not only define it but actually measure it, which is probably one thing that a lot of people are actually afraid of, both investors and maybe also some startups. So let's start with the definition part. Who wants to go with the first one? I assume that EIF has a very specific definition and probably also a framework that you can share with us. So maybe we're not going to start with you. Leif, can you start with the angel perspective and something that you do yourself or something that you see within your crowd of investors when it comes to defining purpose or the criteria that they are looking for?
I think it's not only about neutralizing the negative impact of whatever startup or company does, but it's also about trying to create a backwards effect, like restoring what was already damaged. So it's probably not academical definition, but like I'm speaking from my heart, like how I feel it.
Yeah.
So creating no damage and trying to restore the damage that was done before us.
Gotcha. So I think that's also something that is pretty important, I think, but please correct me. You can't do anything wrong when you're trying to define purpose for yourself and for your investments. And I think that there is this misconception that you have to do everything super perfectly fine and have this really complex framework and then you can start doing impact investing. And I think one of the things or one of the reasons why we're discussing this here and why it's so important to have this discussion with the audience is to really take this fear away and tell everyone who is in the room, you can't do anything wrong, you just have to start, like it is with so many things and what is actually the entrepreneurial way. But now, let's talk with the professional. So how do you measure and define impact?
Well, it's also to stay humble. I think it's still, as we speak, an ongoing debate within the industry. Some would qualify, you were mentioning, Xavier, the GIN report, and that compiles indeed a number of hundreds of billions of assets put at work for impact investing. I think some of us in general would not, let's say, recognize the impact definition in such a report. For instance, so just an illustration that there's it's still a heated debate and there are various definitions. The view we take is to define an impact company is around 3 elements. The first one certainly being the most distinctive one in the startup ecosystem is the intentionality. In the impact investing space, the positive impact that is generated out of the business model, out of the investment, is not an externality and should not be an externality. The business model, again, is set up first and foremost to grow and, at par, address a social or environmental issue. So first, intention. Second, profitability. We are an investment remit. Some would say sustainability. I mean, if you're an entrepreneur and growing your business, if you're raising funds, obviously you need to have a business model that is sustainable or profitable. And finally, that's also not very original, but certainly common for all startups, the scale aspect. And the scalability of the business model is very important. So we would certainly locate our definition of an impact company within these 3 core pillars.
Which kind of proves to show, right? 2 of the factors are typical investment factors. Yes, and one is the additionality. So that's why it goes hand in hand.
Yeah. So Xavier, as you already commented this one, so I'm moving on over to you. So how have you defined purpose for your fund, and how were the conversations with the investors and your LPs that you talked to about, hey, we're gonna set up a fund that is focused on purpose? So what was the feedback? Was everyone, yes, let's go for this, you're awesome guys? Or was it like, are you serious? Why are you doing this?
Okay, so let's start with the purpose thing, because that's been on my mind since we've been discussing. I think we should not be misled. Purpose can be your why. That's how I define purpose. And this can mean for a financial services startup that they inspire the financial service industry and has nothing to do with creating positive impact. It's still a purpose, right? So defining your why is actually how I define purpose. Now, in our case, it is an impactful purpose. So the companies we work with and the way we are set up and why we're set up is to create positive social and environmental impact on society and the planet. Voila. So that's how we define it. The second part of your question?
What was the feedback you got?
The feedback, yeah. Feedback from LPs. So when you talk to the IF, you get amazing feedback on doing these things because it's mission and purpose aligned. I would say some of the more institutional investors, especially in Germany, are still hesitant in some way because they're lacking definition. They're lacking awareness. They still see that impact investing term that's been coined over the last decades, which can be philanthropic, which can mean no return. Is this ESG? Is it not ESG? Where do we rank it? And what does it really mean? So these types of forums are amazing to spread that word that impact investing is an investment strategy, investing into startups that focus on creating that positive environmental and social impact. And that's what we tend to see, where we see amazing feedback and like, awesome, we want to do this, is, as I mentioned earlier, the next generation of family offices. So they have that on their agenda and that's what they want to see. And we also see it in, funnily enough, celebrity investors. So soccer players, musicians, artists, these are the types of people that really want to do it. And we also see it in unicorn founders, yeah, so we should talk, but anyway, unicorn founders that have, based their success on the last 10 years of where we've grown our economy, they now realize they want to give back and they want to invest into these things. And they can add a lot of value as well.
Gotcha. So how could we come up with a common definition of what purpose is and what impact is, and what role can governments and public institutions play in this? Gabi, obviously the question is first one for you, but maybe someone wants to add something on this.
So what we see when we are really working with people just having an idea and really thinking about founding a company is really that they are overwhelmed. Because they have so many issues and this is an add-on they have to think of, so it's really crucial to find the right tools and methods for them. And often it's just simply ask 3 very important questions and think about that. On the other hand, we see that at the moment many impact assessment tools are popping up. So it's nearly getting lost in all the tools we are having. So what we try at the moment is really to make a technology report summing up all the tools and describe, okay, which tool is for whom and what, maybe the best, so to get a first overview. And then every company has to pick its own tool. It doesn't mean that you cannot have one tool for all the different companies, but I think we need kind of standardization as soon as it comes to investment term sheets, etc. Some kind of standards I think we need, because otherwise it can be from 0 to 100 and you never know where you are. So I think for the founders it's a really huge challenge, but what we really try is that every company founders coming to us, we ask these questions, and there are some who really want to have an impact companies, and others they just want to have a classical company and are not thinking once about this issue, and they are provoked through the questions, and then we are giving some support in order to help them to deal with this issue. And with our grant structure, we have this bonus system, and we also have developed a tool for our juries. We always work with external jury members in order to have an education awareness tool they have to do, and it's an unconscious bias tool in order so that they are also aware, okay, we all have unconscious bias in us, and that they are aware about that when they are assessing projects, and also having this ecological and social impact dimension in mind. This is what we are currently doing.
Gotcha. So as we have the feeling, as already mentioned, we see these crises and challenges popping up every day. And I think somehow everyone feels that the clock is ticking when it comes to creating these innovative solutions that will help us to live in this better future. So I'm wondering, and we already talked about the moral obligation, isn't it necessary that governments intervene here and really set specific measures on how to foster companies that are driven by purpose and that have this purpose focus in mind? Leif, you're already grabbing the mic. You want to start?
Yes, it's pretty much needed. What we need, I'm talking now from angel investor perspective, what we need is more, or some for the beginning, angel co-investing funds where public money is being co-invested with angels. Because many of the startups who are acting in impact and purpose area, they are very investment heavy. They need a lot of money, with private money only. It's very hard. for them to get fuel for rocket ship and create more impact and more purpose. So and angels as validators of these businesses, not like combining this purpose and profits, because we are talking about this conflict of purpose and profits. So angels can be the validating force for finding these companies who are combining purpose with potential of profits. And we need governments to co-invest with us, public money, I mean.
Xavier, it seems like you want to add on to this.
Just slightly. I think it probably depends on the geography as well. I mean, the IF is there, right? So we have governments, we have states taking care of this and investing heavily. So I think the access is there. Where I would ask the governments to maybe intervene is more on the awareness side of things. Help communicate this topic more, help educate the people that are in deciding positions with institutional investors to deploy more money into these types of assets, because that's what's needed. I don't think that the public money is missing at the moment, at least not from my perspective. You can go and get it. It's a process, clearly. It's not like you can just get it for free, but you know, it's there. It's there for you to grab. But the awareness piece, the public opinion around it, I think that's something that can be fostered way more.
I think you would have a lot of people agreeing to this, that there should be some initiatives, especially in the first row, I think. So bringing it more for the last 3 minutes that we're having, okay, to the European perspective again. And Cyril, moving it to you. So, and we've also heard this in the previous panel and the previous discussions, that Europe is to somewhat in a global tech race, right? So we're competing, or at least it's perceived as a competition with the US or America, with Asia, India, etc. So a lot of very strong startup communities popping up. So I think a lot of people are wondering, what's the USP of Europe? How can we position ourselves, and how can we make sure that big investors, like we've also heard from SoftBank, have Europe on the radar? Could this be connected to purpose? And I'm sorry for already proposing that purpose could be one of the things, but I think that's obvious for this panel.
Yeah, I mean, just a couple of reminders to answer your question, Lisa. The Europe Investment Bank Group is the largest public bank in the world. And bear in mind that next to that fact, by 2025, the Europe Investment Bank Group committed to invest 50% of all its lending activity, investment activity, to either green or social innovation related projects, companies, global loans, whatever. So it is a huge commitment. And it's, by the way, also something huge to implement in the engine, so to say. That, I think, illustrates the fact that there is a very strong political drive in Europe to make it happen. So obviously, Europe is not one block and one piece, very fragmented reality, very different markets, very different political setups, no doubt. But that illustrates very much we rely on a very strong education system. We enjoy very strong jurisdiction and states in Europe. We also enjoy a number of actors, players, from incubators to VCs to public agencies to that put us in a very favorable position in the global competition, because it is a competition. And one of the core, I mean, the EIB group is not a policymaker. We are a policy enabler, and as such, formally an EU body. So we depend also from the political impetus, and so that means to ultimately us, citizens, represented by the Parliament, by the Council of Europe. So this is a very, there are very ambitious targets in there, and we hope, time will tell, but we hope that what we're working on right now and doing will eventually translate and definitely put Europe on the map. Simply look at the number of unicorns. And again, I don't want to be blinded by unicorn. Unicorn is one thing, it's a sign. There are some others that should be taken into account. Look at the numbers of unicorns in Europe. I think last year, more unicorns raised or companies became unicorns in Europe compared to any other region in the world. So there is a rapid change, and the ecosystem, thanks to you and many players in the room, the ecosystem is developing very well. Just a point on the fact that to make sure the impact or the purpose is safeguarded, the way we've looked at when raising the first impact fund of fund back in 2013, we started with developing an impact performance methodology, and it is not a reporting tool, it is an alignment of interest tool whereby we try to align fund LPs, the fund GPs, the entrepreneurs in the portfolio to commit to next to financial objectives, also meet social, environmental objectives. And we do that also by building links to the carried interest, so that it is not only, a statement that you do in fundraising and forget about once the subscription documents are signed. But I think we have a lot of tools in our end to make it happen. Now, again, the future will certainly be full of challenges, but potential, I think, is great for Europe to become a lighthouse through impact investing, through other initiatives in the global competition.
Thank you so much for this very motivational statement. So I see that we're running out of time. I would still love to do a very brief final round, which is really a call to action for the audience, because I think going to this conference is nice and making you connections and listening to smart people. Thanks for sharing your thoughts. But I think it's also important to not only, do this and then go home and be like, yeah, I attended a nice conference, but to really do something with the things that you've learned and with the connections that you've made. So what's the call to action for everyone who is listening today, live here and also obviously via sort of TV? Who wants to go first? Gabi, I think.
So take the impact aspects into account in all your decisions.
Vert?
I have a call to, I know there's a lot of angels here in the audience and probably watching us. I have a call for angels. If you still do not have this criteria or checkbox in your personal Excel or your personal decision-making matrix, this purpose checkbox, and not just a formality, but something a bit bigger, like Lisa said, like a big checkbox, consider adding it already now, not waiting for future to come, because we are creating this future together with you.
Xavier, Cyril, who wants to go next?
Okay. So looking at your votes earlier on, I would say first step, define your purpose, find your why, and then contribute to the max to environmental and social impact in the way you feel sensible for your business, for what you're doing, for your strategies. I strongly encourage you to look into this investing strategy and maybe reallocate some of your budgets when you can into this direction, because it's helpful and it will return you good.
Cyril, final words.
I mean, that won't be very different. I think that one should never underestimate the why. When you invest or when you decide to go and create your company, I think the why is very different nowadays than perhaps it used to. And I mean, being in a position where you simply look at the potential, financial potential, and everything else becomes secondary, is certainly an approach that is going to be very difficult to going forward.
Thanks for all of these words. I certainly know my why for hosting this panel discussion with you. Thank you so much for coming here. Thank you so much for sharing everything that you've shared. Thanks for listening. If you have questions to these four amazing speakers, please ask them in the upcoming breaks. Sorry that we didn't have time for proper questions, but I think you're going to be around for the rest of the day and people can just grab you and ask everything they want to know. Please give them a big, big round of applause. Thank you so much. Danke.
To Lisa and her amazing panel. Talking about the why, we are also continuing with another video by one of the partners called EY that is going to be on stage now, and then we are following up with the fireside chat.
This time of change allows us to look ahead through a new lens, a chance to reframe the future, to uncover unseen opportunities, for organizations to ask new and different questions and create unexpected answers. Have you reinvented your transformation plan to be radical enough to thrive now? Has this moment changed customer expectations forever? How can you transform at speed to build value that lasts? Are you realizing the full potential of your people, technology, and innovation? At EY, our consulting teams work with clients to put humans at the center of your transformation, deploying technology at speed and innovating at scale to redefine how we live, work, learn, and consume, to reimagine your business. So ask yourself, are you reframing your future? Or is the future reframing you? Transforming to create long-term value for business, people, and society as a whole, building an even better working world. Find out how consulting at EY can help you uncover new opportunities and realize long-term value.
So, talking about realizing long-term value, there is one thing that is essential for that, and that is equity investing. Starts with venture capital and continues with private equity. I think everyone who is in the room and is working mainly with private equity is really waiting now for a part where we also talk about SMEs and not only about seed stage funding for startups. And this is very closely connected, luckily, to the two people that are joining us on stage. I already see them here in the second row. It's Monika and it's Werner, who are going to discuss the importance of equity funding and how it actually influences the future of Austria. And this is not only a niche topic for some people interested in fancy technologies, but actually something that, should be relevant for all of us. Monika and Werner, please come to the stage.
Thank you for having me. I've noticed that in the previous panels, people have said a few words about themselves, so I will also start with this so that you can know why I'm here. I'm a researcher. I'm an economist. I run a research institute called AVCO Austria, and one of our main topics of interest is equity and the impact on the economy. That's not the only topic. Generally, we look at long-term growth, long-term structural reforms, and we try to bring ideas to the politics as for what should be done to bring us back on this growth path. And that's what I will be talking basically today. And I will let Werner talk.
Yeah, hello also from my side. I'm the former aaia member of the board, and I'm now since 10 years in the startup ecosystem, but also I'm the head of the investment committee of the Mittelstandsfonds. Therefore, I know a little bit both sides. When we discuss today, I think we have really to compete with lunch, Monika. So I think we do our best to discuss this issue. And I would like to start with a question for you, because you are the scientist here on this panel. I'm a practitioner, a poor practitioner. So I think you do a lot of research on this question, and especially in these days, we are in a very special situation. Our Minister for Finance was referring to it. We had a big crisis after us. So there is a need for equity. And also if you look to the numbers, we have the proportion of about 75% equity in the US and 25% debt. And here in Europe, it's the vice versa. So the question is, what are the necessary measurements to really increase equity?
Yes, the finance minister was actually referring to the numbers we produced in spring as to the international position of Austria in terms of equity financing, and indeed this looks bad. That's true, and that's definitely a founded conclusion. What has to be done? So essentially what we've been looking at recently is the reasons for why in particular venture capital and private equity are not so well developed in Austria as they are in several other countries. And we looked at particular structural factors which could contribute to the development of venture capital financing and other forms of private equity. And there are, I would say, 20 factors. Maybe I will concentrate on just a few of those. So connecting this to the tax reform, which we have which has been announced on Sunday, there are those big taxes, such as the corporate taxation and the capital gains taxation, which is very high in Austria and is comparably higher than in the peer countries in Europe. And unfortunately, there has not been much done in the tax reform regarding these issues. That the corporate taxation will be down by 2 percentage points, that's not much, and then has been nothing done in terms of capital gains taxation or speculation periods or revising the debt bias in terms of setting equity and debt for financing for companies, in allowing equity to be deducted from taxes and all these kind of ideas which have been floating around. What has been done, maybe not much. There is a second tax which is very important in Austria, and this has been mentioned by Eric Demuth to a certain extent. We need to find good workforce, good talents, and we have harder time than the peer countries because it's not only about Vienna or Linz, it's mostly about very high payroll tax. So essentially, if you as startups, as people who work in technology, you compete with the whole world. So a person who works for a company, you have to explain to them while their cost is at least a third more than when they work in the Czech Republic. So this is something which has not been done. There are several other factors which we think contribute to the development of the venture capital market, and two are particular for private equity and venture capital markets, and from my perspective should be changed. One is the way we tax employee stock options. This is like a topic which has been there for decades, and we've been researching this, and we found that Austria is, I think, third highest taxation rate on employee stock options in the OECD countries. So we tax them with income taxation, which is progressive, it's very high, and several other countries tax it with capital gains taxation, which is also high in Austria, but at least much lower than the income taxation. So essentially, that would be something which could be done here, and I hope this will be coming from a tax perspective. And one last point here is taxation of carried interest, which is another topic which is not really resolved in Austria, and it has been resolved in many other countries. So this is particularly important for investors, obviously. And these are the things which we identify in the literature that should be done as ASAP if we want to have at least a bit of a head start against the other countries in terms of venture capital.
I think you brought very clear measurements now on the micro level, but my question would be also go to the macro level, because being now in this arena since now 10 years or for 10 years, I learned also that we have to change the mindset of the entrepreneurs themselves. As long as they think when somebody's investing in their company, they have sold it, you have a total different mindset. And so I think it would be very interesting, what are your ideas on that? We are now doing a lot of lobbying with the government, but what are this entrepreneurial mindset? How can we encourage this?
That's a very good point. So in our research, we also found several factors which are contributing to the development of private equity markets, and this is the so-called entrepreneurial mind, and this comes together with the so-called uncertainty avoidance. This is a measurement from sociological studies which essentially measures how risk-averse a certain country or a certain cultural region is, and this doesn't look good in Austria, but at least we believe that we can affect this with certain institutions. So there has been some changes in the recent years. For instance, now the insolvency law has been adopted, not yet, but it's been in the process of adaptation, which should become more liberal, which kind of what we always think about startups is that like we have to allow people to fail so that they take the decision to found the company in the first place. And this has been very difficult because the insolvency law was quite strict. And now there are some steps taken to do this. A second thing obviously would be to invest more in literacy and to invest more in the education of children essentially, or teenagers or students, and to kind of convince them that this is also the way to go, that you don't have to be a civil servant if you can do things with purpose, we've heard before, and this is in Austria still something which has not been done much.
I think this is a very, very important point, and I think Corina said it in the first panel, that also we as investors, business angels, also in the startup community, we are in a bubble. And we started this year in Alpbach an initiative, Mondays for Markets, to really work on financial literacy, but also to bring young people in contact with questions like capital markets and how this is working, because, and this is now my point, we also have to address a very different point also to the general audience, not only in our groups and in our circles, social cohesion. We see that this system, the existing systems where our middle class is putting the money to the bank on their deposit accounts and losing it every day, especially in these days, this is a big issue. And so I think to make clear that when you invest in companies, when you invest in startups, even also with models which are more easygoing, which we are discussing with the government, this could help a lot to change also this mindset and to change also the picture in the public that investors are gamblers, to more or less, and that this could be also a point to really fight social cohesion. How do you see this?
Well, absolutely. I have the same opinion. That the problem is that also because of a very loose monetary policy, we see increasing wealth inequality because people who have money invest more, whereas the little money which is in the bank accounts loses value. And this is a particular problem in Austria. I think it has to do also with the culture, but not only, but also with the institutions. So Austria is kind of we call it Vollkasko kind of mentality, in which you essentially don't take many decisions on your own because there is somebody always for you to take those decisions for you, such as, I don't know, there is a lot of consumer protection and the state is essentially very strong. And I think this is one of the reasons why the people do not take those decisions. And I think we need to be much more active in having financial literacy, but also essentially having people think about their finances, think about their decisions. And I think this can be also done with institutions. So with changing, for instance, how certain things are taxed and creating more incentives. So we've been talking about, for instance, the speculation period. So if you hold equity for some particular time, then you will be exempted from taxes. That could be a strong incentive for people to invest in equity, on public equity, in this case probably more. But so we can change this. And this could eventually also lead to more social cohesion, because we would have people with maybe less money also investing in equity, although I am quite skeptical when we talk about people directly investing in private equity, because I think it's too risky but then essentially talking about funds and let them invest in funds should be much more easy.
I think there are a lot of possibilities, and we are trying to implement this also in Austria, where you have the possibility to really invest smaller amounts, also for, I don't know, dentists and other guys who invest in smaller numbers, and then also to participate on this growth. And therefore, I think this is an essential, I think, also message when we discuss call for action, this entrepreneurial view and perspective to take responsibility for your own life. I think this is a very, very important point. But I also would like to stick to this macro level and also discussing some measurements which are now in the pipeline, especially concerning the legal framework. The minister was addressing today SIGFA, but I would like to address also the new limited company, where we try to really push for a more modern law to found companies. So you are also involved. Maybe you can tell us a little bit about this.
Sure, yes. So there is this idea of the Austrian Limited, which would be essentially a limited company, which is much easier to found with less procedures and less people involved, such as the notaries should not be involved at many stages. I think this is still open, but at least that was the idea. And the second component, which is really important, that it's the idea would be to move the taxation of stock options, employee stock options, to the capital gain taxation, which would make it much easier much more beneficial for both parties to issue stock options for the employees. And this should be also much easier. For instance, you would be able to give shares as you are able to do it essentially only in an AG without the voting rights. So all these kind of things are planned. Maybe is too much of a word, but at least there are ideas to do this. And we also know from our research that this taxes and bureaucracy is something which is really blocking development of VC markets. We have the Global Entrepreneurship Monitor data, for instance, which says that in Austria most people see this as one of the biggest problems to found a company and in particular to let it grow. So we've heard today in the morning the problem which we have is essentially the second, third round, the large rounds, right? So and that's where the Austrian Limited could help, because you can get more investments from the abroad, you can get employee options, you can be much more flexible in which you when you get your money from abroad, so you don't have to go to notary every time. So it's also planned to have all the contracts written in English without the necessity to have all those things written in German, which is obviously an important point for international investors. So if this comes, I think this could be maybe not a game changer, but at least a big help.
Yeah, it would not only help startups and founders, but also a lot of SMEs, because especially in these days, you maybe have to restructure the company, bring in an investor and things like that. And this would be, there are a lot of formal measurements which would be reduced. So I think this could be a big step forward. And I would like also to give you an example. When we had these negotiations and these talks, it's always very important that we ourselves also take different perspectives. So we had one meeting because it was a very intense debate that we totally dump our constitution and legal security with these proposals. So we invited more than 30 lawyers to discuss with them. And you really could see they were totally supporting these proposals. So sometimes it's very important not only to work with government and the official part, but also to find other allies and to find other people who support us and share our vision to really come through with it. And I learned in the last 10 years, if you have devil or soup with the devil, you need a long spoon. So I think it's very important that we really think through with whom we can really also collaborate in bringing through these ideas and work for these ideas. If I would ask you, from your perspective, as a perspective of scientists, what would be the most important measurement you would suggest to the government to do, and maybe also what we as a community could do to push for it?
Well, I think that you should probably focus on the niche topics, because I work in applied research and in policy recommendations since many years, and the first question that comes from the government is always what would be the cost? So how much tax money will we lose? So essentially that's how they make their decisions. So it's probably not smart to start with the big things, such as reduce the corporate taxation by 10 percentage points, because this will be difficult. What you could do is try to think about the niche topics, such as carried interest, such as the employee options, because this is not the topic for the whole economy, but it's a very important topic for the startup and investor scene. But it's, in terms of policy, it will not be such a difficult thing, I guess, to push through. And the bureaucracy, obviously. So all the measures which reduce bureaucracy are we see this in the data. There are really a lot of studies that show that the red tape is a reason why we lose on economic growth. My institute has calculated several years back that only gold plating of European rules. We've been talking about, for instance, the pension funds, which are not allowed to invest in certain things. There is a lot of gold plating going on here. Would raise our GDP by 1 billion in the long run. So just simply by reducing the red tape, which is not essentially connected to European law. So I think this would be the two most important things, maybe the easiest ones to push through.
Thank you, Monica. Thank you so much. I think what is very important, what we try to do is to really work closely together in our bubble, with our colleagues from AVCO and the business angels, but also with the Austrian startups. And we also try to bring in unusual suspects so that we find other allies. And I would like to invite all of you that it's not only about making money, but it's also to take your responsibility for your own life and live a more entrepreneurial life. Thank you so much.
Thank you.
So, Werner, thank you a lot for this call to action, because that would have been exactly what I wanted to say when I come to stage now. So, definitely agreeing to many things that have been said now. Also, thank you for discussing actual topics and measures that can be taken to also take out this feeling of how abstract everything is connected to the capital market, and to make sure that there are many things that can actually be implemented today or tomorrow by our government. And staying with the topic of SMEs and how they are funded, this is the next panel that is going to happen. And it's also the first panel that includes people joining virtually, so I very much hope that this is going to work. But our panel host is actually here in person. This is Felix Falten from Speed Invest. Please join me on stage, and he's also my colleague here at AVCO. And basically what we will discuss now before the lunch break is how to make sure that SMEs, that are the so-called backbone of our economy, can get funded in the future. And Felix, I'm handing this over to you. And yeah, please take it away.
Thank you. I think we need one more chair, so just let me know where. Die anderen zwei sind bitte. Ja, schaut sonst leer aus, oder? There we go. Red or blue pill? You've chosen the red one already. There you go. Well,
it's a corporate color.
Exactly. Welcome, everyone. We're the last chance you have to learn something before you go for lunch, so thanks for hanging in there. And it's always difficult to have the panel before lunch, but I'm a VC, so I'll try not to keep you from your exit too long. We're discussing private equity, funding the backbone of our economy. I'm joined by 4 guests who I'll be introducing in a second. Why did we as AVCO and aaia want to discuss the topic? It's very simple. 60% of GDP in Austria, and this is, by the way, true of the region we're in here generally, is generated by SMEs, mid-caps, whatever you want to call them. And in 2020, the total investment in Austria into that sector was 100 million. So there's a big discrepancy there. That's opportunities, a wasted opportunity in terms of capital, but also in terms of expertise. And these 2 areas are what we'll be discussing today. My name is Felix Falten. I'm a board member at AVCO and an early stage investor at Speed Invest. So I'm speaking here with people who operate perhaps a stage or 2 later. And I would say we'll dive right in. I have 2 guests on stage with me today, and 2 in hyperspace, who I can't actually see right now. There we go. And I'll actually start by introducing our virtual guests, who you're also seeing up there, and then we'll dive straight in with an opening round. So I have Amelie Groß, Vice President of Chamber of Commerce in Austria, and Managing Director of Family Business, I think in the 3rd generation, if I'm not mistaken. Christian Kasten, Operating Partner at Deutsche Private Equity. So based right now, I think in Germany, not sure exactly where you're calling from, but thanks for joining us. Berlin? Munich, great. So thanks both of you for joining us virtually. And on stage here, Thomas Bobeck, Head of Equity at Erste Asset Management, and Markus Ihlenfeld, the wizard behind the most popular children's bicycle produced in Europe at the moment, co-founder and CEO at Woom Bicycles. And we'll start right in. As I've said, we have kind of 2 broad angles that we'd like to look at. What's the entrepreneurial point of view? Why have entrepreneurs? Why do entrepreneurs in Austria and beyond perhaps hesitate to take in private capital? And what are the experiences? And then on the other side, we have the asset management and investor point of view as well. And we'd like to bring these together today. I'll start with you, Markus, if I may. Thank you for joining. Very short notice as well, so we really appreciate that. Thank you again. Perhaps we can kick off. Just tell us a bit about your journey with a private equity investor. So I'm pretty sure most people know who Woom Bikes are, what you do. But tell us a bit of the history in a nutshell. Kind of what led you to take private equity investment? What led you to take outside investment? And what's it been like for you?
It's been a crazy ride, yeah. That's for sure. Thanks for being here. Well, yeah, we started 2013. That's about 8 years ago in a garage. So really, not because it was cool to have a startup in a garage, but because we were bootstrapping and we had a garage to do it. So it takes two. So we started. We kicked it off in 2013. Our problem was a little bit that everybody was telling us that we were really stupid to launch this and to quit our jobs, because the bicycle's been on the planet for 250 years, and there's no need for another bicycle company, especially not for a kids bike company. So we started out really, only our closest family members believed in what we were doing, and everybody else was just telling us straight up, you're wasting your time and you're making a big mistake. So this was just like us against the world. The world said, you're dumb, right? So that's why we haven't even considered the private equity concept in the beginning, because why? Why would we do that if nobody believes in us? So we started doing our thing, and we were growing, and we took on some private loans. So we were asking anybody that we met at parties, at soccer events, like, hey, do you want to borrow some money? And drew up a contract, and we collected quite some money by doing that. So that was quite interesting approach for growth. And in the beginning, of course, we thought you just go to a bank and you get money for your project from the bank. I mean, we were really, really dumb. I mean, I went into 10 banks, and they all loved the bikes, and they said, this is great. Yeah, I have kids too. You have great bikes. I love them. They look great. And 2 days later, risk manager says no. So this is really, I mean, this was, I still today don't believe I was going through this phase and was hoping that there would be a banker giving us money to grow this business. So this is a bit from the other side of the private equity side. Is this, where do real people come from? They come from thinking that there's actually money in the bank that you can get. So, but we've learned otherwise. So that has changed a little bit in our mind. So we were growing, and then there are lots of bootstrapping, no salaries for 5 years, the founder story, the pain, like, oh my God. And then we grew, and then at some point, I think we got a bit tired of bootstrapping and always investing from 1 year to the next. If you grow by 100% every year with a product, your working capital requirements are really, really high. There's not much you can do. You just have to purchase 100% more stuff to sell next year. And I think we came to a point when we said in 2019, we had about roughly projected 50 million in revenue, and that was all without private equity, and that was all without giving away shares, because we did not think it was a good idea to give away shares in a company that's ours. So that concept kind of did not make sense in our world. Like building a house with your wife by hand, and then at some point selling a room in that house to a stranger that can move out any day and sell this room to anybody else afterwards. That concept kind of that did not resonate with us. Yeah? Now we obviously see this much different. So to make a long story short, sorry, this is a long story. So we came to the point, we said, okay, let's take some risk out of this, and let's launch the next boost. And that next boost was only possible with a lot of money from external partners. So we made that decision 2 years ago to actually search for to sell shares in the company. And but we did not just want to do that. We had a ranking of partners. We wanted to have a strong advisory board. You stop me if I'm talking too much.
No, please.
We wanted to have a strong advisory board, and we did not just want to have money. We wanted to have great people to sit around the room in the advisory board meetings. We had one yesterday. We actually had a selection. We had a row behind all the investment partners, whether we want to drink with them a small beer, a big beer, or no beer at all. And that to us was very, very important, to have partners that are on the same level. We're grown-ups. We don't want anybody to look down on us. We were looking for strong partners that do exactly we were hoping for exactly what has happened is these guys just make us think so much bigger than we ever thought before. And I'm getting goosebumps for that because it's really great. I'm really happy to have these people live in my house in this room. Yeah? I like to see them at breakfast or have a beer or 2 or 3. You know?
That's the perfect point. I'll interrupt you. Thanks for sharing that story with us. No money in the bank, Thomas Bobek.
I'm sorry, this happens all the time, but yeah.
You're trying to change it. You're setting up a direct product. You're setting up a fund of funds. You've been active in the space for a while, but kind of giving it a lot of thought and energy right now. Why now?
Yeah, thank you, first of all, for having me. Thank you for sitting next to the success story. Quite interesting, and I think that's the right way to approach it, to see and be on the same level and think about it from that way. Would I go for a beer with this guy or not? Is probably the right approach because it's a long-term cooperation you're going through. On our side, with Erste, we had the keynote speech this morning where Ingo drilled on our history. We were supporting venture capital private equity initiatives throughout the regions for more than 20 years. We have also supported AWS Gründerfonds in 2013, together with, of course, the Austrian government. This was, by the way, after the financial crisis and the so-called government debt crisis. By the measures of that time, we called it really a debt crisis. From today's point of view, it doesn't look like a debt crisis anymore, by the way. It's a successful story. As an investor, we're still invested there. We also founded and launched a quite innovative program, Taurus Capital, which is a revenue-based finance approach in-house in 2018. And over the recent couple of years, that's why the question, why now? What happened? Gradually, we must say, over the last 10 years, we've observed that financial markets got more and more political. It was dominated by the central banks and still is, and it's dominated now by fiscal policy. So there's huge liquidity trying to stabilize and calm markets. It's hard to reverse it, which leads to what we all observe, low rates and low rates for longer. And if you look at the traditional asset classes, a lot of them have expected negative returns. When you take into account inflation, it looks even worse. So it's quite natural from a market perspective and from an asset allocation perspective to look for these asset classes who promise and can deliver higher returns, attractive returns, and also established itself as an institutional asset class over the last 10 years. So that the why now is partially a market answer, expected return. We have to go there. And the other answer is the market structure. The big question now is we have big interest, big pressure from investors and big investor pools, but also from private investors, really to find and invest into attractive assets that show attractive returns. And if you go to the public markets, we heard it already today, companies stay private for longer for several reasons. We observe it in the US, the largest market as we know it. A listed company by number is heavily in decline over the last 10, 15, 20 years. We see in the US that companies backed by private equities, private equity managers, GPs, are now kind of double the number than listed companies. So the universe you're looking for, the opportunity you have as an investor is much larger. We see the same trend in Europe. And we as Erste Group and we as Erste Asset Manager, we operate in our region. We look at Austria CE, we consider it as one region. I think that the concept of geographical borders is not valid anymore. We need to look at the region as such. However, we talk about Austrian SMEs today. as you said, we have started with Taurus investing into Austrian SMEs with a special instrument of revenue-based finance. We have made the decision to broaden this offering for investors now to invest a larger fund, a larger pool into Austria plus growth SME stories. And there is a lot of opportunities. I think we had the headline in the Financial Times that there is so much money in private equity, US buyout funds paying large premiums for acquiring listed companies. I think it was 70% or something. That has not happened so far in our region. It has not happened in Austria CE. So it does not mean that's not working here. It just means to us that the opportunity is there, and we see also with this story there are lots of opportunities in the region. So the why now is becoming obvious. There is pressing need and interest from our investor base, being private investors, institutionals, and there is a lot of opportunity on the private market side, on the private company side, because there are more opportunities and very attractive assets.
Perfect, thanks. That's a perfect segue to Amelie Groß. Takes two to tango, so we have the capital. We need the opportunities as well, and you represent, as Vice President of the Chamber of Commerce, you represent a lot of these SMEs. In kind of the preparation for this panel, we had talked a bit about perhaps listening into what the companies you represent, what some of these entrepreneurs you represent think about this topic of taking on outside capital. Markus described one thought process, but there are many others. Tell us a bit about how is this possibility of outside investment, private equity, even seen by the companies and entrepreneurs you represent?
Hello there from Salzburg. I hope you're having a great day in Vienna. Well, the past 19 months really were a very big challenge for all of us, especially for our companies. And those small and medium enterprises were hit really, really hard. But even before the COVID-19 crisis, Austrian companies had a relatively low equity base. And this equity weakness suddenly became visible. Thankfully, to the financial industry, there have been many loans, and the financial industry has been part of the solution as a provider of liquidity. But loans are not always a solution, as we already heard. But private equity is the nutrient for entrepreneurs. And for that reason, we really need more risk capital. And now, after the crisis, we see that the economy is growing really fast. We are facing new challenges like climate change and digitalization and the aging society. And now, more than ever, we need entrepreneurs, and those have huge investment needs. And for that reason, we really need private equity, and it's getting more and more important.
And just to follow up there, is this something, are the entrepreneurs you represent regularly, is this world of capital, is this something they're familiar with, they're slowly kind of actively seeking out in the same way perhaps Markus 8 or 5 years ago could or should have done perhaps? Is that something that's happening more today than, 5 years ago, or on the entrepreneurial side?
Yeah, absolutely. The need is really there, and I think we need new tax instruments to support this new situation that we are having. Okay, so then thanks, Amelie Groß. Next segue to Christian Kasten in Munich. We talk a lot about capital, but Markus already alluded to the topic of expertise and partnership as being equally important. And that's also something that actually we as AVCO are always very focused on placing, that it's, capital is one side, but the brains and the smartness are the other side of the equation. When you look at companies, so you're an operating partner, so you work very closely with your investments. Give us a bit of perspective perhaps on the investor side of things, like on the direct PE investor side of things. What do you look for, and do you look for opportunities where you're able to really bring in that expertise, or what's your search grid at the moment?
Yes,
hello from Munich, and also thanks for having me and having the opportunity to tell a little bit about how we invest and how we work with our investments. So what do we look for? I mean, it's quite obvious we are a growth investor. So when we look at companies or at potential acquisition targets, we look at how past performance has been and how the market is also performing, basically telling us is there future growth potential, and which then turns into return potential for us as the investors. But a very important, if not the most important element besides the business model and the market environment is looking at an excellent management team. If we see that, it's already one big step towards our decision to actively follow the investment opportunity. And besides that, of course, it has to fit our sector. So we have limited ourselves to 5 sectors that we think we have in the past 14 years since DPE was founded gained sufficient experience to really assess the opportunities within the sector and also the companies that operate in it. So 2 things basically are the most important when we look at how we work with the investment after we have done the deal. First and foremost, we see ourselves as a catalyst and an active supporter of the management teams in implementing above market growth. And what Markus Ihlenfeld just said is basically a good example of how we also work together with our investments. I'm an operating partner, and our model is that we have an operations team that consists of 7 people right now, which have different functional but also sectoral expertise that can actively support the management teams during the, let's say, very ambitious growth phase that we usually envision, which would mean that we would, double, triple, or quadruple sales and also earnings within a relatively short period of time. And since this is really a challenging thing to do, often when we tell entrepreneurs in a transaction situation that we have this expertise and that we can provide support through the operations team during the holding phase, and we have experience because we have done it before multiple times, it builds trust in us as basically the right owners that not only bring money to the table but also expertise and active help. So that's something that we bring to the table that might differentiate us from other investors that maybe take a less active approach. But we try to have an as close as possible relationship with the management teams in order to basically also align our long-term interests in growing the company together in a partnership, and not just as a passive investor who maybe comes to board meetings and helps a little bit with a network, but really provide active help.
Yeah, thanks. Markus, can you share? You mentioned that one of the big benefits of having your investors join was just raising the ambition level. Can you give us some specific examples of how you work together with your investors, things that perhaps you do differently now than you would have done before, specific changes that they've brought about, kind of following on to Christian's point about the operational side of things?
Yes. Yeah, we frequently have strategic sessions. There's like 2-3 hour sessions, lots of post-it notes, lots of pens, and during one of those we completely restructured the company in March, which was like so after these 6 months a complete restructuring. It's like a new company. Made the decision to hire, I think, lots of people. I think we made a decision to hire 150 people in the next 24 months, so doubling the employees that we have. So this is a kind of the stuff where you as an example, you develop the org chart. Yeah, I was like, okay, how many C-levels do you want to have? What kind of stuff do you need under a CFO? I mean, you have some ideas, but you don't really have we had some people in the room that have done this twice, exactly been at a position where we were, let's say, in spring and where we want to be in 2 years. So that helps tremendously. So you just don't have to read this stuff or Google. Yeah, Google how to hire 150 people. You just say, hey, Flo Schwantner, for example, is like, hey Flo, how did you do that? And he will tell you, and then he will tell you, and here's a tip, and don't do that, and do that, and you're like, great, I mean, this is how it works, right? So it's actually quite easy.
Okay, yeah, great. And I think one of the earlier panels, my colleague Marcus pointed out that it's good to have investors for each stage, and it sounds like you have the right stage fit with your investors. Thomas, one of the challenges we often think about in the world of venture capital is, regional spread, and is there even enough, talent? Is there enough opportunity in, shall we say, Austria, to even absorb this amount of capital? Now we've heard today, and we're very proud at Speed Invest to also have proven that there is. What's your take on this when you look at this slightly later stage segment? You look at Austria, but you mentioned you're looking at CE in general. The fund sizes that you've mentioned to me in advance are large, but not huge. Do you think there's plenty of opportunity out there to be found and actually invested in at this point? Are you comfortable that there's on the deal flow side that you'll find matches?
Yes, and still was declined to make some reference to the success story, because we see here really an example of wealth creation beyond pure financial returns, and these are stories out of a not so common industry as we observed it. And that's the case if you go through our region, if you go through Austria, and if you go through also the CE region. It's quite fragmented in some industries, and there is, I would say, lots of opportunities. We face some issues, of course, as we know it. The equity culture in Austria is not that developed as it could be. We all know that. There are also solutions for that. I would say there are plenty of opportunities. There are also plenty of opportunities because we have now a developing earlier stage ecosystem and base, which in the end of the day creates a lot of additional opportunities here. Also, the answer is partially, if there is money, there will be opportunities. So it's a push and pull thing from supply and demand as well, because there are a lot of good entrepreneurs in this country. They have good business models. They maybe never thought of really leveraging and scaling it up on a global basis. And there are also some very healthy and successful family businesses, and it's hard to talk with them about taking an equity stake and working towards an exit in a few years' time. That's not on the table and in the first place, but being flexible and being flexible with the financing situation. Like you said, there is the right investor for the right stage, but there's also the right instrument for the right financing round. And we made very good experiences with revenue-based finance model, where we tried to capture the best of both worlds, having the benefits of a kind of debt instrument tax-wise and operationally, and also having the benefits of having equity-like in terms of improving the balance sheet and the growth perspectives. Especially Austria has a long history in growing over the credit side of the business, or the financing side, and it has well worked through over decades. So everybody's used to it and can use it, and it's a success story. We know that, but we are in the 21st century, and we have to think global with all business models. So this has changed a lot, and I know people know that, but it takes time really to step by step growing into these processes. And we have, of course, also the buzzword transition ahead of us. It's most of the time technology driven. It's also in terms of purpose or environmentally climate change driven as well. But it affects almost all industries. And we have a broad set of industries also in Austria, and a lot of people face this financing need. We know credit limits growth at some point, so there is a broad range to talk about, and the solution to get around this initially equity culture topic is very often to have a broad set of instruments, start with one that is acceptable for both sides and work from there. Once we see investors that work with us over several times, several years, there is trust, there is a lot of things happening, and then you can take the next steps. That's work.
So the opportunity is there.
The opportunity is there.
Yeah, great. Amelie Gross, you've gone through a transition yourself in the company that you manage, but you also obviously are in touch with many entrepreneurs. What are some of the biggest blockers or concerns that entrepreneurs have when they think about financing? Their bank maybe turned them down. What are the things that that are really holding entrepreneurs back? Because obviously there's a lot of SMEs that perhaps are not going to write huge growth stories like Marcus just described. Congratulations, by the way. But there are also these companies out there. What's holding them back?
Well, it's not so much what is the companies are holding back, but people are holding back money. And people in Austria are hoarding their money on their bank accounts. And this money is not only losing its worth every day due to the very low interest rates and the high inflation, but most importantly, this money doesn't do anything for our economy. And as I mentioned before, for that reason, we really need tax incentives, like a tax-free allowance of 100,000 euros to make it more attractive for private investors to make equity available. And the USA, for example, already have a capital market-based system, and we have a banking-based system. I'm not saying that one is better than the other, but I think it needs a very good mix from both worlds. And Europe really needs now to think big, to act bold, and we really need risk capital for the new industries, for digitalization and for innovation.
So from your point of view, taxation is a big part of the story in terms of leveraging some of the capital that's out there, but perhaps not finding its way to opportunities. Christian Kasten, you spoke a bit with Thomas Tirch and the team a bit about the impact of ESG, and so I was just reminded by Amelie Gross's comments that kind of having cash is one thing, but going forward will come with a lot more strings attached also on the investor and asset management side. Can you describe a bit on how what the impact of ESG is or has been or will be from your vantage point of view? So as an investor, the way you work with companies, the way you choose targets?
Yes, absolutely. So first, from our perspective as a GP, regulation has gone up drastically since I basically entered the industry 7 years ago. The number of reportings and KPIs that we have to measure and consolidate and report back to our investors has increased very drastically. So that's one thing to it. But the second is that basically ESG, it has two elements to it. The first one is risk mitigation. And when we look at investments, potential investments, of course, we do our ESG due diligence. We see the red flags. Are there any risks that might destroy value if they're not managed or mitigated properly? Could be environmental, social, and governance risks. But for the past, let's say, 2 or 3 years, we have taken a different perspective to it, and are now also looking towards the value creation part of ESG. For instance, I'm working very closely together with one of our investments in the construction industry, and what we can see there is that public tenders, they include now sustainability criteria, and if you fulfill these sustainability criteria, you have a competitive advantage in the tender process over other companies. And especially the construction industry is an industry where you don't have a lot of ESG awareness yet. On the other hand, it produces, I think, it is the largest emitter of CO2 in Germany at least, and probably also worldwide. So if we look at that from a value creation perspective, and now also are transforming that particular company that I'm working with into a more climate friendly and eventually climate neutral company, because we see benefits to the business model and competitive advantages. So that's something that we look at both from the operational side, but also when we look at investments. I think the bike market is a very good example. We have done an investment in the bike market just recently. It's driven by increasing environmental awareness in society. People are turning away from cars, using bikes. Cities are building bike lanes. You can see that very clearly here in Munich, also elsewhere in Europe. So that's something where the ESG element just opens up more opportunities for growth. And that is some new perspectives that we have taken during the past couple of years.
Yeah, thanks. Looking at the time, it's 1 o'clock. We have 5 minutes left on my clock at least. So I'll just stick with you, Christian Carsten. Closing round, I said I would ask everyone just kind of similar to Lisa Fassel earlier, call to action. What do you think, when you look at the market from your perspective, what's the biggest change you'd like to see in the next 5 years that you think will have an uplifting effect on PE in mid-cap or PE in SME? Your 2 cents in a nutshell.
Well, my 2 cents would be, I think, success stories where partnerships between entrepreneurs and private equity investors are spread in the market and let's say act as role models for others who consider how do I finance growth, how do I organize growth. If that word spreads, I think that's the best way to convince entrepreneurs to consider private equity as a good way of organizing that growth and maybe achieving higher growth rates than they would achieve if they were, let's say, choose the traditional path. That's something that I would see that would have a very large impact.
So mindset shift on the entrepreneurial side. Amelie Gross, your call to action in closing, shift in mindset as well.
Well, the first thing is tax-free allowance, and the second thing is financial literacy. Just as Monica mentioned earlier, I think that financial topics really must become part of basic school education. And we as the Austrian Federal Economic Chamber are already working together with other stakeholders on an inclusion of this very important topic, but it needs to be included even more.
Great, thank you. Thank you both of our virtual guests for joining from Munich and Salzburg, and thanks for your input. Same question here, I'll take it in reverse order. Thomas, what's from a bird's eye asset manager point of view, we've talked a bit about why now, what are the big changes you hope to see in the next 5 years? Who needs to move?
Who needs to move? Well, the big wish would be, it's a little bit naive, but the big wish would be a deregulation. Because as I mentioned, we have investors who are interested and keen to invest into VC, private equity, and we have the opportunity in front of our doors in our region. We know this region, and we see the opportunities. And in the middle of those two, we have a big jungle where we need to lead every investor through this jungle in order to bring them to the right way to investing. So deregulation would be the big wish.
Something very specific, perhaps?
Very, very specific. I think there are a lot of concepts on the table, and I think the better way to do it and approach it is really have to step-by-step small pieces. For example, a stock plan for employees, bringing people closer to an equity culture would really support it. An easy thing to do, I would say, and with a great effect. The other thing is institutional investors. When I look at insurance companies, pension funds, they are more heavily regulated than any private investor, and they are professional investors as such. So there's a lot of things to do with small things enabling them to fulfill their fiduciary duty again, because they have problems to do that already. And the last thing, financial literacy is another buzzword. I have 2 small boys in school still. One is already out of school, but if you look at the schooling system in Austria, and we all know it, the whole education you go through, and every time you get the question, what do you want to become in your life? It's always about learning and getting a job. And if you think of the whole spectrum, I would think of an education, simply an element where you really realize there are a lot of options for me as a young a citizen on this planet, I can look for a great job to do what I like to do. I can be self-employed, but I also can look at options where I maybe want to build a business in the sense of a machine that creates wealth and well-being, or I want to become an investor. I would like to see young people coming out of school with this set of options in front of their mind and say, this is what I can do. Because we are in the 21st century.
Yeah, great, thanks. Thanks, plenty of homework there for all of us. Markus, I mean, you have, I'm assuming, a very detailed 5-year vision for your own company. If you take a step back, beyond tripling your headcount again, what's your wish? Or?
I think, okay, my wish is, okay, this is a different story, but for this audience here and for the question here, my recommendation as one entrepreneur in a country or in Vienna, this is my private opinion, is I think this industry needs an image campaign. I mean, if you are an entrepreneur somewhere and you run your own small business, there's like, you rather go to the dentist, you rather buy a used car before you invite a venture capitalist in it. The image of this industry is vulture. You be honest, yeah? Yep. And oh yeah, this is great. Let's get somebody in here and sell them a piece of my company, and then he's gonna ride me like a horse to death. I mean, and it's not the truth. Yeah? Philip von Bregal, I'm not calling you a vulture, but we have a great. But until now, we are in this relationship, and now we appreciate what this does to us, and we're totally like, yes, that's great. We should have done this much longer before. But why did we not do it? Because we didn't have the trust in this. And this one, so that would be my recommendation, an image campaign for the industry. We are no vultures. We're here to help and this kind of stuff.
Perfect closing words. We're not riding anyone to death. We're inviting you to lunch. Thank you very much to all our panelists.
Thank you.
Thanks. Thank you, John.
Bon appétit.
Yeah.
The offices, and also 3 roundtables, which are possible to join after lunch break. So enjoy the time, and we see us back at 2. Thank you.